Good morning, everyone. So another day full of events, full of speakers, full of scale-ups, full of VCs, full of LPs and GPs, and so many other things that hopefully is only going to bring joy to all of us. And with that, I just would like to hopefully see if we can see and make this day even better than yesterday. So what we need is that, first of all, just be here, either virtually or in person. If you are going to be here in both ways, you always have the opportunity to use Brella. With that, you would be able to have the best networking you ever had. So try to make advantage of this opportunity. The weather outside is awful, so if you really would like to do something, it's better just to be inside. Then you're going to have some warm welcomes and warm conversations and hopefully a good food and a good coffee. So just try to make sure that take advantage of this opportunity and then try to make the best for your scale up or for your VC and then try to make it happen. But talking about make it happen, I would like to try to say thanks to people that really try to make this day happen for all of us. So BNP Paribas, Brella, Enterprise Estonia, Obram, and a partner that I always have to pronounce their name properly, Konieczny, Webrzicki, and Partnerze. And I know that I butchered it, and I apologize that. Vienna Business Agency, Innovix, LG, and our fintech partner, PKO Bank Polski. So just try to remember that our sessions are being recorded. So if you really see that there are 2 stages and then you want to be in one of them, don't worry about it. You always have the opportunity to go back and then try to have it later. So try to make sure that you have a good balance between your networking, because I know that most of you come here because you really like your networking opportunity. But at the same time, try to take advantage of all these interesting speakers that we set for you and try to make sure that you're going to, find some new ideas at the same time you find some new people. And with that, I will just try to say that we're going to start by 9:20. So we're going to have a small break. So you will have some time to grab some cup of coffee or at the same time try to prepare yourself for a day full of events. So with that, I would like to just, let you just go, grab your cup of coffee, have an early morning for yourself, and then see you at 9:20 on the stage. Thank you. So we're thinking about what is the best way to start a day. And we're just thinking of if we will talk about GP's presentation, that couldn't just make it better. And in order to talk about GPs, I also, let's just say that we couldn't find somebody better than Igor. He's an investor, ecosystem builder, and startup mentor. So all you need to have in order to understand exactly how the GP's presentation is going to be. So with that, I'm not going to take more of the time from Igor. So I would like to welcome him on stage. And Igor, the stage is yours.
Thank you very much. Good morning, everyone. It's a pleasure having you and being your first speaker for the day. Can we go with the presentation? Yeah. So I'll be speaking about a region and a topic that is really dear for me. I'm coming from Skopje, Macedonia, and working for the past 10 years in the investment and startup space in this region. So I'm, as a person that loves the region very much, and it's very early in development, I would like to present you and have more understanding of where it is and what type of activities are happening in here. So first, a little bit about me. Yeah, the clicker works, hopefully. Yeah. The Balkans is a very specific part. We're not in EU, but still we have some amazing people that celebrate technology and for the past century really contributed to growing and making a mark on the world. And myself, I also do a lot of things. One of those is being a tourist guide. So as a tourist guide, I always try to point out what is the best places to go to eat, what are the best places to visit. And this is my way of saying what is the best about this region and why it should be on your map as next destination for investment. For the past years, I've been working as an investment facilitator for the Western Balkans, and I'm also president of Startup Macedonia, which is an ecosystem support organization. Yeah. So here is the region. That's the part all surrounded by European countries, bordering Bulgaria, Romania, Croatia, Greece. And the countries that consist of it are Albania, Macedonia, Kosovo, Montenegro, Bosnia, and Serbia, which is specific because these are the countries that actually service a lot of the tech world in Europe with amazing talents and developers, and just starting to make a mark on the startup side and creating some amazing products. So we'll be talking about the products and opportunities for investing in those products. So all the countries are different, but yes, so similar. Very, very similar to other Eastern European countries. And these Eastern European countries is one of those that is Poland and Romania, Bulgaria, etc. We do come from a post-communist regimes where investments was not so very active. We have volatile politicians, so turbulent ecosystem of ups and downs, and things are really hard to project. But still, we try to see the better side of the world, even though we are the best champions in blaming others, and it's others' fault that we are at the place where we are. Well, yeah, it's our fault we are here, and we are the ones that need to actually make it happen. So this is why I'm trying to surround myself with a lot of developers, a lot of investors, a lot of startup founders, because we have some amazing talent and young professionals really hungry for opportunity and change, and we are making the change ourselves. I did a very short interview for Albania Tech and presenting the region as the next tech gem of Europe. Basically, the gem is yet to be polished. There is need to be a lot of development done, and but still, European tech is coming, investors are coming, we have some amazing things to present. We have also been on the radar. You can see us at the very bottom of the Central European transaction of VCs, making only few investments per quarter. In 2022-21, we had 2 in Macedonia, 2 in Bosnia and Herzegovina, and a few in Serbia. But that's actually, if we can call it, 100% better than the last year when there was only 1 investment. So we can say that we are growing really, really fast. Our region is really making a mark with some founders that are raising their rounds. And the rounds are starting small, starting in the range of 100 to 500,000, and now starting to go in the millions. We're bordering some of the countries that make the mark with unicorns. And we're just predicting that it will be just 3 to 5 years until we make the first unicorn ourselves, hopefully even faster. With UPath and InfoBip in Croatia just recently getting that status, and last Payhawk from Bulgaria really made a mark, knocking on the door saying, okay, we are next. Macedonia is next, Serbia is next, Albania is next. And we do have some interesting things to share. One of those success stories are definitely Nordius from Serbia with an exit that they made in 2021, north of 380 million. And this company, it's invested by Take-Two Media from US. I would mention another Serbian company that just recently raised another Series B round, Tenderly, within the last month. So this is also a company you should follow. Cognizant, probably the next unicorn coming with a foot on the Balkans. It's a UK, Croatian, and Macedonian-based startup that utilizes AI to help companies sell better. And this being invested by one of the regional champions and investors in South Central Ventures, which is, I would say, one of the rare VC funds that has footprint on the ground. Giraffa is another company that you should follow, and basically it showcases that even the local market can be big enough for you to make a huge technology company. It's the Google of the Albanian language, and building products and technologies on top of their search engine, e-commerce platforms, etc., etc. So the question is, how do we actually accelerate the path or accelerate the time until we get to more unicorns and funding? Well, we need the ecosystem, and this is the reason why, after working 5 years in acceleration and investment as a VC, I joined the Swiss Entrepreneurship Program, Swiss-funded program that actually supports the 5 countries of the Western Balkans. Development of entrepreneurial ecosystem, approach on the existing and local ecosystem builders, and early stage growth of startups. They've been working amazingly, supporting accelerators, supporting programs, bringing international talent in, and it's really, really brought the ecosystem to a next level. 2 years ago, we made another change, focusing more on the investment side, supporting different investment activities, structuring angel clubs, VC funds, supporting fundraising for startups, where we are doing a lot of work, personally leading that whole process. So we're in actually 7 countries, 5 in the Balkans, and then Vietnam and Peru, with the Balkans being most interested because I'm there. And the results are amazing. We have invested funds directly to companies, mentored or trained a lot of mentors, over 319 investors trained, which is something that I'm really proud about, bringing more private capital into the ecosystems. So our goals 2022, 2024 are mainly to increase the number of investors. The reason I'm here definitely to match with more investors and corporates interested to support the ecosystem and invest directly. Therefore, we are working with regional and international accelerators, VCs, angel clubs, angel funds. The second is definitely increase the number of investment-ready companies. And this is where we actually focus more than 60% of our time, since founders are those that are making the difference and are worth our efforts. And the third is supporting government institutions and creating positive climate for investment. So I will touch base on all these three and how we're doing that. We managed to train about 140 investors during 2020 and 2021, combined in the 7 countries, with about half and more coming from the Balkans. We have 131 active investors. This number is growing, and it's a way for us to give the companies access to more capital. Because the capital is lacking, we went on the education side. So combining with some experienced trainers and angels from Switzerland and from Efino, we created something called the Western Balkans Angel Academy. The Angel Academy serviced 50 investors so far, and the investors are coming from the entrepreneurial world, having their own businesses, creating products, and now taking a role as an investor. It needed some more attention. So connecting with European Business Angel Association, with other associations in Zurich and around Europe, we managed to have a very healthy group of the Western Balkans angel community that just started recently investing their first tickets in startups. The second part, as I said, is working on the investment readiness. So we launched something called the Investment Readiness Program that it's actually in process right now with its first batch. 108 companies applied, out of which we had 78 startups in the 7-day bootcamp. It was very intensive work, understanding valuation, understanding approach to investors, understanding how to structure their pitch deck. Just that we don't have that experience, it doesn't mean that the companies are not great. A company is actually accelerating really fast, which is the reason why we expanded the team and brought more startups in the next stage. So we had the top 25 companies already selected with their pre-due diligence process done, and now reaching out to investors that are going to fund these companies with tickets between 300,000 up to 2 million. And startups are in different stages. They are working mostly in B2B SaaS. Some of them working working with B2C, but mostly creating enterprise products for the global market. So regionally, we see our region as very small. There is hardly opportunity to create a really sustainable business, but that's why most of the businesses we have are global first kind of businesses. And the startups we're working with mentors. We had peer-to-peer support, weekly master classes, and some of the master classes can be seen later. Amazing contribution was from more than 50 investors from the Central European investor space, working with them, mentoring them, and we hope to actually have some great closings. Here are the companies, the 25 that you can actually look into. These companies had opportunities to work with a lot of mentors and prepare their documentations and go-to-market strategies and valuations and legal structures. There is opportunity for the companies to actually go abroad, because we understand that investing in the region can be a challenge sometimes. So opening that door and setting up a structure outside is something that we are looking to support the companies with assistance. The other part that I want to mention, and this is also open for all the LPs and corporates that would be interested to invest in the region, is having a chance to be one of the first coming in the recent announcement of VC funds being structured regionally. That's the fund of funds in Serbia and equity fund in North Macedonia. The funds are basically a matching fund focusing on the region, but also companies would be also investors, and GPs would be able to invest in other jurisdictions, namely in these two countries. But you will have a chance with at least 10 million contribution to the fund to create a fund for these two countries and invest regionally from Serbia and from North Macedonia directly in North Macedonian startups. The deal flow is huge. These two countries especially have their fund of innovations contributing to more than 500 startups each. So more than 1,000 startups receive support and funding. So they are ready to actually scale. They have their first prototypes, their companies, they're generating revenue. So this is actually the breaking point where we do see a potential of VCs being more interested in the region. For all of those that would like to know more on how you can get involved in the investment ecosystem and meet the actors, we are organizing in Tirana just in a few weeks the first investment matching forum. As a way to match startups and investors, we'll have the top 25 presenting there, so we have a chance to meet the top startups that are already fundraising, plus about 30 local and 30 VC funds and angel investors from Central Eastern Europe. We know it's small, but we need to start from somewhere. This is where we're actually trying to really get into the family of the investment family of Central Eastern Europe. And with this event, we would like to extend an invitation for all of you that are interested. So join us, find your investment match in the Western Balkans. My name is Igor Majov. You have my contact there. Swiss EP and all the ecosystem is really welcoming to you. I would like to show great time and support the new unicorns that are coming from this region. We say that we are not looking for many unicorns. We like to have 100 million type of companies more than multiple unicorns, but why not? I would like to invite you being part of their journey and together with us support their investments. Thank you very much.
Thank you very much, Igor. So, yes, please. I know that it's morning, but we can try to just make it a little bit, more energetic. And for those of you that still need to have some more energy, I have good news, and that is the fact that we are going to have a quick break till 10 a.m. You guys would be able to get a bit more coffee in your system and a little bit more breakfast, that you will be even, let's just say, more energetic and more enthusiastic about the rest of the event. So with that, I would like to pause it from here, have a quick break, but remember that to come back at 10 a.m. and then we're going to have more speakers and a lot of more interesting things waiting for you. So thank you very much. So, I hope you had your coffee and you're ready for something even more hot. We're going to talk about succeeding in ventures as an LP. So, if you are an LP, GP, or startup who really wants to know more about that, you cannot just find a better place. And also, in order to make it even better, as a person with a bit of, let's just say, background in media, I'm always happy when I see that, like guys from media are going to explain it because they're very good at wording. And at the same time, hopefully, you're going to learn everything about it. So I'm not going to take too much of your time. I'm going to introduce Eleanor from Sifted just to be on stage. And then Eleanor would be able to introduce the speakers. And hopefully, for the next 1 hour, you guys are going to enjoy this conversation in depth. Thank you very much.
Jonathan, you want to come on up with me? Amazing. Well, we are starting off the morning. I'm excited to see a few people trickling in now that everyone's had their coffees. We're starting off the morning with a topic that I think is super interesting, and also I know a lot of people who are here at the conference are interested in, which is how to succeed as an LP in VC. I'm Eleanor Warnock. I'm deputy editor at Sifted. Sifted is an FT-backed publication that reports on startups, scale-ups, and VC in Europe. And I will be moderating the conversation today with Jonathan and two other people joining us on this. Yay, we have everyone. Hey guys. Hey Ertan. Hi Ian. How are you? Amazing.
Good.
Awesome.
Well,
I thought it would be really nice if everyone could just kind of start off with a quick introduction of yourself and kind of what you think you're bringing to the conversation, what your perspective on the conversation is today. Maybe Ian, do you want to start us off?
Sure. So, hi, I'm Ian. I work with AXA Venture Partners. We're a €1 billion plus fund that's solely focused on VC. We have an interesting structure at the fund whereby we have a GP and an LP within our platform. So we bring some quite interesting perspectives from just being a global organization and quite unique in the way that we operate. Myself, I've been here for just over 2 years. Joined just before the pandemic hit, so just in time for all the fun times. And before that, was working in a corporate finance in London. Spent some time in the UK studying. Grew up around the world when I was younger. Spent about 10 years in the US, which is why I have this weird accent because I'm actually half French, half Scottish as well. So it's a weird mix going on there. But yeah, excited to be part of the conversation. Nice to meet you all.
Nice to meet you. Jonathan, maybe we'll jump back to real life.
Sure. Hi everyone. And I'm Jonathan Hollis, one of the partners at Mountainside Ventures. And what we do is we work with founders and funds on their next raise. The core business is we advise and partner with early stage companies raising typically 1 to 15 million. And on the side, we also look to support emerging fund managers raise the next fund. And so we organize events, we run reports, we run workshops with the mission of promoting more capital going into European VCs and ultimately then into startups. And some of the areas that I'd like to bring today and discuss, we ran a report last year and 60 LPs contributed in specifically what they looked at when it comes to VC investing. And so we've got some data and some stats to share. The second aspect is we speak to a lot of funds, specifically emerging funds. The conference we're running in September, we had around 250 applications on the VC side, and so we've seen lots of decks, and some good, some not so good, and I'll be also discussing hopefully some of the trends we're seeing in the space.
And Ertan, last but not least.
Yeah, I'm the founder of Multiple Capital. Multiple is a fund of funds, a very traditional but micro fund of funds that invests in other micro VC funds. We are managing now roughly something like $30 million and have invested in 45 VC funds with that money. And most of the funds are relatively small in fund size and invest extremely early. And we've done this or started doing this in Europe mainly, and now it is becoming more and more global. So we have, I would say, 1/3 US and rest of world, and 2/3 still European niche managers. Myself, I'm living in Frankfurt, Germany, born and raised here. Just lived 1 year in London, don't have the accent, never could adopt the bus driver's London accent. But other than that, here's home with my family, and yeah, we're doing this from here everywhere.
Maybe we could just kick off the conversation, Jonathan, with you talking a little bit about what changes you've seen, trends you're seeing in LPs investing in VC in Europe recently.
Sure. I think one of the trends that we've seen is, we all know how difficult it is raising from LPs, especially in Europe, and still the government is still very involved across Europe. And so one of the trends we've seen is actually other VCs investing in VCs. And so it's, so maybe some of the mid to top tier VCs who have raised fund 3, 4, 5, and they're becoming, and they're creating a separate fund-to-fund vehicle. And I think one of the reasons they're doing that is to access earlier stage deals. And so if you're a VC investing at Series A, Series B, Series C, you might want to create a vehicle to invest in a dozen to maybe 20 seed stage VCs in order to get the information rights and access to the earlier stage deals. So that's one big trend we're seeing. Another trend is the rise of emerging LPs. We all talk about emerging VCs, but actually there's a rise of actually founders or individuals investing directly into funds. And that might be into listed vehicles like the likes of Augmentum or Forward, who have recently in the last couple of years listed in London, which means that individuals can actually access some of those funds, or it might be exited founders that are looking for investing into some of these funds, which typically a minimum ticket size for many of them is 1 million, and now there's a bit more of a democratization of VC, and individuals can actually invest in those as well. And then probably the third change. And the third trend is, I'm sure we'll get to a bit more detail, is just the rise of ESG and impact investing.
Super interesting. Yeah, definitely, especially with the founders becoming LPs as well. I think the VCs really appreciate being able to kind of bring them in sometimes, even help them win deals, and yeah.
Yeah, it gets a bit confusing sometimes when the founders are LP of a fund, and then the fund might be an investor in their company. So we've worked with some of the companies that we've worked with. There was one that raised a couple million last month, and the founder was an LP in one of the funds that ended up investing. So it gets a bit complicated, but I think it can only be a good thing, because it means that founders can empathize more with how VCs operate, and if they can understand more about how VCs work, they can actually build a better proposition for them.
Definitely. Ian and Ertan, I want to go to you both and just ask you, what do you think, from working with many different institutions, what does good look like for an LP? What practice? And maybe also speaking from across geographies as well. Ertan, you were talking about, your kind of global focus as well. You want to start us off?
Ertan, do you want me to give it a... Yeah, okay. Yeah, to that last point, Eleanor, I think it's quite interesting because, the past 4 or 5 years, venture has gone through an immense amount of change. This was an industry in the past where, there's a lot of focus in the US, some stuff going on in Israel, things going on in China, but it wasn't, exactly truly a global asset class. And over the past 5 years, that, perhaps a bit more, it's changed immensely, where now the landscape has evolved into, is truly a global asset class where you have, geographies like Europe, you've got Southeast Asia, you've got India, Latin America. It's all coming into the play, and we're seeing more and more high quality founders come out of all these different regions around the world. So being a good LP or being a successful LP, I really think you do have to have kind of this global lens. Even just understanding the fact that US managers are moving around, coming to Europe. Asia managers coming into Europe, or Europe managers going to Asia. We're seeing that more and more. So in order for us to be able to kind of understand what good looks like in terms of a good manager, good strategy, good outcomes, good performance, all those things, you really have to look at it globally. A second point I'd mention is, perhaps having kind of a clear USP as an LP is actually becoming increasingly important, because providing capital is one thing, but that's becoming more and more commoditized, And so for us at AXA Venture Partners, that's the hint is in kind of the title, but we're backed by one of the largest insurance companies in the world. Just to kind of give you a sense of scale, there's 150,000 plus employees, 50 plus countries covered, and they have an annual IT spend of like $3 billion. So it's a large organization with a huge network. And so when we speak to managers, one of the things we can offer is very interesting introductions to people who can serve as customers for their portfolio companies, or even just providing thought leadership when it comes to anything insurance, fintech, all those things. So within a phone call, and that resonates very well with GPs for us. And then in terms of just kind of a focus, on the point where we were talking about venture, I was talking about venture becoming more global. It's also becoming kind of it's a much larger asset class today than it used to be. So being very sort of VC focused can actually in itself be kind of a unique selling point. Being able to have those kind of in-depth insights and knowledge on the asset class specifically. I mean, just to give you a concrete example. So, I speak to LPs who, they're doing stuff in private equity, venture, all the different asset classes. And those conversations tend to be a little bit more surface level than if you were just speaking to someone who's spending 100% of their time on venture. And that also kind of reflects in the conversations you have with GPs. So just having that kind of depth of knowledge is really important. And then lastly, I'd say, just having that broad network within the industry that you can leverage to reference those managers and understand from the inside by speaking to those people what great looks like. And if you combine all those four things together, I think you have all the pieces to become a good LP and make the right choices when it comes to manager selection.
Very interesting. Ayrton.
Yeah. So I agree with Jonathan on the two new, let's say, LP groups entering the LP world, which is, VCs, other GPs, doing more and more investments in other VC funds, especially in, let's say, feeder funds. And some of them even setting up own fund of funds and doing it even more professional and investing, like Molten, for example, very systematically in seed funds. Others doing it less professional as GPs, individually investing, which I still really respect, because I think they're believing in the ecosystem and they're putting money into other GPs as well, and that's a good sign. The other new group that I also see are founders. So founders who exited, founders who had secondaries, who believe in other GPs, who sometimes invest in their own GPs, like in the VC funds that invested in their companies, but very often also invest in other GPs, right? So in first-time managers that they know, other operators they knew from the past, who are becoming GPs now with their first funds, and they are raising a lot of money from founders today. So that's a new group that I see is very active. It works well for small funds, of course. If you're a very tiny fund and you have a good network of founder LPs or other founders, you can really raise significant money in terms of fund size for yourself from these groups. Of course, as soon as you become a slightly larger fund, it is very difficult to raise enough money from those groups, because still, so far as I can see, the tickets are relatively small from those groups. But still, it's a very good sign. It's even for us as a fund of fund, we see now more interest from these two groups compared to the initial target group that we had, which was family offices, right? So we always thought, okay, we will help we call it unsophisticated family office to get access to a super diversified, well-selected portfolio and venture, like an allocation product. That was like the initial idea of Multiple, to give a family office in, I don't know, Cambridge or Manchester or Hanover or Kassel, those smaller cities where people don't have really access to VC funds and don't have the mindset of understanding which funds to back, to give them an allocation product. Now we see it's a completely different group that shows interest in a kind of fund like ours, a fund of fund, and it's more the sophisticated people, which surprises us, right? So it's more the sophisticated other GPs and sophisticated founders who could invest in other VC funds as well, but who understand even for them investing in 20 or 30 funds globally is a big stretch, right? And this is like the new group. Another, of course, new group entering the LP market is more and more fund of funds now also in Europe. It's not. I think when we started back then, we were one of the very few fund of funds doing VC only in Europe. Today, there is probably a dozen, if not more. I stopped counting. But there are a lot of fund of funds in Spain, in Germany, in the UK, I guess. Some of those more institutionalized funds, let's say sub-funds of the main funds, of the main GPs, VCs, doing more and more fund of fund investments. Tiger announcing 1 billion, to invest in micro VCs. So there's a lot of new entrants who are professional but still raise capital themselves, some of them at least, but who want to enter that market of investing in VCs. Still, having mentioned that, I still see a lack of the other groups that should be part of that ecosystem, which is again the kind of institutional money and family offices who still are not, in my view, not really actively allocating into venture European-wide or globally. So many of them, if I look at the German market, which is the closest to what I'm looking at, many of the institutional investors in Germany and family offices in Germany, and I'm talking here about 500 plus family offices, and from those, maybe 2% are actively investing in venture, and 98% have no venture allocation at all. And if they have, it's maybe one fund or a handful of companies in Munich where they are based. That's not really a venture allocation. So that's the thing that is still, I would say, a big lack or gap in Europe versus US, Asia, where a lot of family offices very actively build venture allocations. A lot of institutions like endowments, for example, have 20% venture allocation in a super diversified way. So that is the thing I think that we still have to develop in Europe, where it's not enough to have only founder money and other VCs money, which is not typically really allocating huge amounts of money, but it's more a small ticket to have a feeder, feeder fund giving you more deal flow. It's a different thing. And sometimes, backing a friend or good guy that you like. It's a different thing from a family office that could deploy 10 million over 3 years and then another 10 million in the next 3 years, et cetera, et cetera. So that's something that I'm still missing, I would say, in the current ecosystem, and that we still have to develop.
And what do you, Jonathan, maybe you can comment on this. What do you think is holding investors like family offices back from allocating more to European VC?
Good question.
It's like the $1 million question. If we can unlock this, yeah. It's like.
I think the main issue is probably that when you're. I think it's operational. I think as a and this we talked a bit about this yesterday. If you're a company, if you're a founder, and you're raising from VCs, the job of the VC is to speak to you and diligence you. If you're a VC and you're raising from a family office, the family office often just doesn't care. That it's got in terms of its AUM and its wealth, it's likely going to be investing sub 1% in that asset class. And so if you think about, the operational and the day-to-day of the life in a family office, it's completely different, of course, than the life of a VC. Because their day job isn't to sourcing and diligencing deals. And therefore, as a result, you have to try extra hard, and you have to speak to the right decision maker. And often, we see a big trend in if the family office isn't interested in that particular sector, if they haven't got a background in it, if they haven't, if it's the wrong day of the year, wrong day of the week, they're just not very interested. And so I think one thing that could look to improve it is to just try and narrow the focus down into meeting and engaging with family offices that have a background and that you can build more engagement. Because I think operationally, if I was a family office and I had 1 billion to invest, would I spend a lot of time speaking to 20 different VCs when it's 1% of my wealth? Probably not. However, one trend that we have seen is the rise of more multi-family offices, which operate much more like an institution in terms of processes. And so that's one positive sign that actually if family offices get together, then they can have a dedicated person who's in charge of sourcing and investing, and then it gets a bit easier. But in answer to your direct question, I'm not sure what the answer is. I can just see that the multi-family offices are easier, and if you can pitch something that is relevant to them, then that's even easier. I had a conversation last week with the family office, and the first conversation was, what do you look for? And the answer was, anything. We're opportunistic. Every family office is opportunistic. Well, I mean, why? Because it's the principle. Why would they not be? And then the second question was, actually, what are you like? You're going to invest in? What have you invested in? And then the conversation was, well, actually, I exited a fintech company, and I'm probably more likely to be interested in fintech. Then you're like, okay, fine. Well, you're opportunistic, but actually, you're probably only going to really invest in fintech. Then it's like, okay, well, how many assets do you have, and how much do you look to invest? And then you realize that, if they've got a few 100 million looking to invest, they're not going to worry or care about 500,000, 1 million, 5 million euros. And so then the next follow-up is actually they're going to be interested in investing in large amounts of money. And so although on the face of it, they're opportunistic and invest in anything that they're interested in, actually upon a deeper dive, it might be later stage and a specific sector.
Interesting. Ertan, I wanted to go back to you too and ask you for your opinion on why you think that family offices haven't allocated as much to European VC. And I wanted to also dig into what you were talking about around this sophisticated investor versus the not sophisticated investor. I thought it was very interesting that you characterized founders who maybe they're making their first LP investment in a VC, but you described them as being sophisticated. I would love to hear a little bit more about that.
Yeah. So it's my favorite topic, by the way, so I'm happy to talk a little bit more in length about it. But to answer very quickly your sophisticated, unsophisticated answer, I think the sophistication of the founder is at least he knows the names, he knows the model, he understands how they invest, he understands what a seed stage fund is, he understands the different verticals of venture investing. He understands the let's say the basics, and he has access, he has a network, right? So he knows the names. He has maybe spoken to them, pitched his company at some point, and spoken to 50 VCs. So he has met them. He knows how they think and where they are and why venture is venture. So that's the sophistication part. Okay. Same, of course, for GPs of other VCs. Of course, they know their business and they know roughly. Still, I still think that even GPs are not the level of a professional LP because it's not their day job, right? So they're not talking to hundreds of other VCs from an LP perspective. They may be talking from a co-investor perspective, or they're talking from getting deal flow from a smaller fund or earlier fund perspective, but never from an LP perspective. So most of the GPs allocating to other VCs have not looked at hundreds or thousands of funds and then selecting 5. It's typically the ones that they know, that they like, and then they do a ticket. And it's most of the time local. So the 5 things that I recognized as the problem why family offices are not really able to, let's say, allocate at the moment actively in that market is, first thing very quickly, is education experience. So they're not really educated in the venture world, in the venture ecosystem, and so the basics, even let's say a closed-end fund, how that works with capital calls. Sometimes we have to explain family office because they've never done a closed-end fund. They've never done capital call management, etc. So that's the basic things, education. Experience is the other thing. They've never invested, let's say, 10, 15 years ago in a fund and seen returns, seen that this evolves into a very interesting thing. Not only investing in a fund, but let's say several funds to see how a portfolio evolves. So that's the missing part, or let's say the first part, education experience. Second is family office, as Jonathan said, they're doing everything. They're opportunistic, right? They're not doing only venture. They're doing real estate, equities, bonds, private equity, hedge funds, any kind of infrastructure products if they're big enough. So they're doing everything. And because of that, they have a lot of gatekeepers between the family offices and the target, let's say, companies or funds or fund of funds even. The gatekeepers are banks, sometimes also multifamily offices, by the way. So multifamily office is nothing else, in my opinion, as something like an intermediary between the final money and the products that you want to invest. Some of the multifamily offices are very professional. Others behave like gatekeepers and banks. And if you look at that, banks can have experience, again, on education and equities, bonds, in those standard markets. But most banks don't understand venture, again, right? So they're not the right gatekeepers to select for the family office the right funds in venture. And that's, I think, a second, let's say, bigger issue in the European ecosystem. Third is access. So education, gatekeepers. Third is access. How do you access? Even if you want, let's say you are, a family office somewhere, and you wanna build a venture portfolio. It's not like that you can go on to Bloomberg and compare the funds and then select the best funds and call your bank contact and ask them, hey, we want to buy that and that and that, and then in 1 year maybe sell that again. So that's not happening in venture. So venture is a very intransparent, inaccessible market. So for most family offices, it's very difficult to build that knowledge and access to understand how to see, not even select, but how to see the market, the universe. And the fourth thing I mentioned already is transparency. It's an intransparent market. It's not like that you can see and have that. And the fifth thing is also something that Jonathan mentioned. I would say they don't have a clear mandate, right? They don't have we as a fund of fund in venture, we have a clear mandate. We have raised money for venture, and we have to deploy that money into venture in a specific time. An opportunistic family office has no clear mandate for venture. So you might pitch them, it might work. You might pitch them, they might say, come back in 3 years. We have time. We don't have pressure. We don't have a mandate to invest in venture. I think that's the 5 things that are, in my opinion, the biggest stoppers from family offices being real allocators in venture. And to just one sentence maybe to how to do that or how to improve slightly. I think at some point they have to start, and with the start, ideally they have to create something like an internal mandate. Something like, for example, we have to allocate or want to allocate 5% in venture over the next 10 years, right? And then they start to allocate. They start to build up. They start to educate themselves, ideally internally if they are big enough and have people. If not, work with partners who can help them, to build that allocation. But it should be not super opportunistic. It should be a clear mandate on deploying or allocating a percentage of their wealth into that asset class. That's, in my opinion, the right way to benefit long-term from venture and to build their venture allocation in a family office or small institutional investors. The same thing.
And I feel like it's such a shame because there's also so much beyond that capital that family offices can potentially contribute as well. And I feel like that links really well with a point that Ian made earlier about this communicating your USP and communicating that you are, you can contribute so much more than just capital, right? And I'd love to hear from you, Ian, a little bit more on that point. Like, how should LPs think about that, like, extra stuff? What is the universe of things that they could be, that they should be thinking about providing as an LP beyond just money?
Well, to be honest, it's a good question. So I think it really depends on a lot of things. I mean, I've already mentioned for us, it's kind of having that network behind us of people that we can make a phone call to in a situation where maybe a manager wants to understand better what's going on, in the property and casualty insurance space for a particular investment that they might make. So I guess one of the things is kind of just leveraging that network that you have and understanding how that can contribute to a conversation between you and a GP in a different way to everybody else. and whether that's through, networks that you've built through different industries, different asset classes. I mean, you just got to do what you can to kind of bring that to the table. And then just also, I think, from our point of view, and this is something that takes a little bit of time, as you spend time looking at a lot of funds, a lot of managers, you accumulate a heck of a lot of data. And I think just having kind of that data-driven mindset when you approach any investment strategy is important. But in the case of an LP, if you can bring to the table a set of insights that you've derived through an amalgamation of tons and tons of data, like so let me give you a kind of a concrete example of what we're doing. So one way for us to have better conversations with our GPs and GPs that we want to speak to is, we've seen in detail over 1,000 funds, right? And when you get information from all those different funds, you have a bunch of data on companies, you have a bunch of data on performance, you have a bunch of data on sectors, stages, all those things. And a lot of LPs, they'll have that sitting in their system somewhere, but they don't really make use of it, right? And so what we decided to do was to kind of put together a sort of proprietary kind of database where we can quickly pull insights from all that data. And, a single GP will only see, they'll see a bunch of companies, but they don't see hundreds of other funds are seeing at the same time. So if you can bring that kind of top level view of what's actually going on within the industry, and leverage that to have really meaningful conversations with GPs, that is a huge USP. That is a huge game changer. But that takes time, and that's effectively that's IP that you're building over time. The other thing I'd probably say is, next to data, is just also just to be honest, if I go and speak to a GP, I often ask, what can we do to be better LPs to you? And they often say very simple things like, you guys see tons of different styles of reporting, for example, right? If you know what a good report looks like, or a good bunch of reporting that's issued to you looks like, and we're not doing it as well as other people, give us feedback. So just even giving feedback on simple things, things like reports that they give back to their own LPs and how to improve those things. That's helpful, right? So just having that constant dialogue and those constant touch points with those people, GPs tend to really appreciate. I think we get really caught up in all the work that we have to do, being at our desk, crunching through numbers, whatever we're doing day to day, but just remembering to have those touch points and have constant conversations with people. They'll remember you and they'll appreciate it. So yeah, that's what I'd summarize it as.
And I think you make a super good point, which is that LPs can be such a strong force for helping the industry professionalize and pushing the industry forward, right? And I think one area that we're seeing that really come to the forefront is around ESG, right? LPs coming forward and telling GPs, okay, you need to tell us what your portfolio companies are doing on ESG. You need to be reporting about diversity. You need to be reporting about the economic or the environmental impact of your fund and then also your portfolio. So I'd be really interested to hear, maybe Jonathan, you can kick us off on this, how you see that ESG conversation evolving between LPs and GPs.
So I think we're certainly seeing it evolving over the last decade. I think in the analysis that we did, 2/3 of the LPs mentioned this was something they were looking to do more of, and I think it's clear for those in the space that the LPs have a lot more control and power, and could and should be doing a lot more. I think at the VC level, I think it's still not very clear what ESG means and what it encompasses. We were having a workshop last month with a number of portfolio companies, and it's part of the ESG network. And ESG for founders might just be things like avoiding taking the plane where you can have a video call. It might be a cycle to work scheme. It might be a whole bunch of things that you'd expect are now pretty common, but still fall under the ESG umbrella. And so I think one of the issues we've still got within the ESG space is defining exactly what good and what the criteria looks like. But we are also seeing, of course, a lot of LPs pushing for pushing for this more. Some of the LP conversations we've had recently who specifically look at impact, we've also noticed a bit of a trend from those LPs, where before they might be investing specifically in impact funds. Now they're looking to invest in impact-driven or impact being part of the thesis. And so I think this is probably as a result of wanting to, of course, invest for financial returns and for profit, and seeing the data shows that actually an agnostic or specialist fund where impact isn't the core focus, but where impact is embedded within the thesis, is likely to do much better than one where it's either not for profit or where impact is the forefront of their thesis. And so I think that can only be a good thing, because it means that if all funds have got impact in ESG as part of their armor and part of the thesis rather than at the forefront, I think that's a good thing for the ecosystem.
Ian, how have you seen GPs become more sophisticated around ESG, and what do you think LPs can do to help push that forward?
Yeah, it's good that you bring up the ESG point, because we internally went through a pretty detailed conversation about 6 months ago about what we should do about our own ESG strategy. So in doing that, obviously talking about the data stuff, but just having access to all the different funds, just seeing what best practice looks like in the industry, we were able to kind of come up with a actual action plan and ways to meet. So actually set of objectives and an action plan against those objectives. And the way we structured it was very much aligned to the UN Sustainable Development Goals, which is one way we've seen people do it. But just before I kind of dive into that, I just want to say that it's actually quite interesting to see how different parts of the world within venture operate with ESG. At least from the research I did, it seemed like, in the US, and this may be anecdotal, so maybe some of you guys will disagree, but in the US, it seems like the policies there can be fairly underdeveloped compared to what you see elsewhere. In Europe, it felt like there was, the policies around ESG were more developed than in the US. And then in Asia, it felt like even more so than in Europe. So it was interesting to see that kind of difference between how managers operate in those regions. So you asked, what are people doing? To John's point, like it's hard to see what the criteria actually is. The way we've done it is we've said, let's look at E, S, and G separately, those three aspects. For the E point, we're at the moment we're looking to engage a third party to perform a sort of like emissions report on our own footprint and how and through our operations internally, but also for our portfolio companies on the GP side of our platform, with the aim of kind of understanding how we can improve those processes, reduce those emissions from us internally, and also provide kind of insights to the portfolio companies that we work with to help them kind of address the way that, address ways that they can reduce emissions themselves. So, and with funds, I suppose you could do the same thing. The biggest contributor to environmental impact there is often travel. So to John's point, maybe taking more board meetings on Zoom would be helpful. But on the S front, in venture, there has been kind of everybody's aware that there's a lack of diversity at the leadership level, and gender mix and even other types of mixes, just diversity generally. So things we're doing internally to kind of mitigate that is, putting unconscious bias trainings in place, ensuring that we contributed to the community around us. So we're setting up schemes where we have matching mechanisms for donations or even volunteer work that we do in areas near where we work, and even just kind of tracking internally. I keep pushing this point, but on the data point, tracking internally the kind of diversity within the funds and the companies that we look at, and using that not as a primary decision maker for making an investment, but as an indicator of, okay, is our portfolio over-indexed on just male teams, or do we have a good mix of male-female teams and the people we back? but it starts with the data, and then just kind of leveraging that data and bringing it forward to all the people that we work with, the partners, the partnerships, the GPs, and the portfolio companies. I'll stop there.
And what's your view on this?
So two things. One thing is, of course, I see a very similar development when I speak to globally GPs and also founders. I just one anecdotal meeting I had a week ago with a Turkish founder who did something in quick commerce, and when I mentioned ESG and SDG, he was just not aware of it, right? So you've never heard of ESG or SDG, and that was quite shocking for me at that moment. But I think that's just a trend at the moment, and in some areas like Europe, ESG and SDG goals are much more important and much more looked at, but also driven much more through the public institutional investors like the EIFs of this world and KfW and BBBs of this world. I guess that is one of the reasons, which is probably less a problem or less a focus in the US, because there are not really lots of public institutional investors. So I don't know how the pension funds and endowments look at that point. So that's one thing that I also see. The other thing is that in Europe especially, and that's, let's say, the market that we see more, you have the, again, EIF-backed funds who have a clearer understanding on how to report an ESG as well, which I think is okay, is good, but ESG, in my opinion, is always a little bit backwards looking, right? So what happened in the past and how do I report it? Whereas the SDG goals are really onwards looking, and it's more important in our opinion. So funds that show us that they have interest in SDG goals have that more in a, let's say, intrinsic way, right? And they are more intrinsically motivated to be sustainable, to look at SDG goals, and to invest in those kind of companies. And other small things I think that we all see in let's say, in the US as well as in Europe, like in all venture funds, in my opinion, is the trend to be more diverse, trend to invest in diverse teams, trend to not only gender diversity, but we identify a lot of diversity, regional, geographical diversity, ethnical diversity, national diversity, age diversity, educational diversity. So a lot of those funds that we speak to are interested to have a more diverse portfolio. A lot of those funds used technologies like Zoom even before COVID. So they are, in a way, much more, let's say, sustainable in their daily work compared to a lot of traditional industries. So that's what we see. We are still too small to really track that in detail for each fund that we look at or even invest in. It is sometimes impossible, for example, to push any US fund who has never really done a reporting on ESG or SDG to do that for us. I think there will be a general trend where everyone will adopt some kind of ESG or SDG reporting in the future. We are not able to push that, and we are not able even to push that on a portfolio level, because we have like 800 companies in the portfolios across the world, and it's just impossible. What we have thought about doing is to bring some transparency, is to use, again, technology, to use public data, available public data, to understand how sustainable our portfolio really is based on the public data. So you can understand, how many employees the companies have, where those employees work, how old they are, what gender they have, et cetera, et cetera. So you can, if they work in Copenhagen or in some areas, they are probably not a lack with or have a poverty problem. On the other hand, for example, we have a lot of companies in the Eastern European ecosystem, and we think that this even helps even more with poverty or jobs in that job creation in that areas, right? So you don't have the big banks or big industry companies paying 100K salaries in those regions, but you create companies like UiPath in a region like Romania, which employs thousands of people maybe today, and they create real jobs with real pays for those people. And that's something that we see. Again, it's not like perfectly trackable, and we're not good in green bashing, so we can't have a certificate on our report to be green and pitch the pension fund and get money to do that with 20 million, 30 million fund. But we think that just naturally and intrinsically, many of our managers have sustainability as a goal and see that. And of course, the other big trend is that just many GPs have that really as a target, right? Written target in their decks, in the thesis, is that they want to be a sustainable fund, that they want to invest in sustainable technologies and climate, decarbonization, decentralization, etc. So these are the trends that I see.
And can I just jump in for 1 second? Just if that's okay. Yeah, I just want to say, I think one thing that we realized was when you're tackling ESG, whether you're a GP company, LP, it's easy to kind of get lost in the whole idea of like, okay, let's tackle every single problem we can on every front. And I think we, especially as Ertan was saying, and sometimes you have a lot of capacity internally to be able to track everything, do everything. We're a team of 4 on the LP side, and we're managing a lot of things at the same time. So it's important to be kind of as pragmatic as possible, and at least that's our view. Just to kind of pick a place where you think you can make the most impact and measure it in the short term, medium term, long term, and set yourself goals in each of those different quadrants if you had to put it in a matrix. So something as simple as like, okay, let's just track, I don't know, whether I sat in a deal flow meeting with a GP that we're working with, and the way they did it was pretty simple. They had Trello, their deal flow tracker software, and every time they had a company presenting or a company in there, they would either put all male or all female or mixed, just as a way to track gender diversity. That's not very difficult to do, but at least it gives you something, right? And so just starting with small steps like that can be helpful in kind of building on something as you go further down the line. But yeah, sorry, just wanted to throw that in.
Yeah, definitely. I think it is. It's like people get kind of freaked out about ESG. It seems like this really big, scary thing, but actually just trying to break it down, look at it like from those really simple, small components is super important.
And I think the other thing I'm very optimistic about is a bit like consumers changing their behaviors. I think a lot of founders now, millennials and other generation, have it front of mind. And the more founders push it to their VCs, and the more particular they are with the VCs they work with, the more particular the VCs will be to their LPs. And so I think generally, if we look at the world, the optimism is that the people actually receiving the capital are asking for this more and more. So I think even if there's no push or regulation or criteria, there's going to be a natural move across the industry for it. Just because that's the way this generation and the next generation is.
I think we can also kind of link the ESG conversation to the conversation around emerging managers as well, right? So we're seeing so many more, female-led funds and funds with an impact mandate that are coming out of Europe. So I'd love to kind of I think we don't have too much time left. We can just end the conversation talking a little bit about, how can LPs just empower those new emerging GPs or work with those GPs? Maybe Jonathan, how do you see that emerging?
So I think the analysis we had last year suggested that 90% of those LPs that we surveyed were interested in emerging, and as I mentioned, 2/3 on the ESG front. So it's clearly a trend that is moving. I think if the question is how do we engage more LPs to invest in more of that asset class, I think it's difficult. I think we map something around 2,500 LPs that invest specifically into European funds. And I think if you look at the data, it's something like if you take the most active 20, that's 80 to 90% of the market, and then the rest there's a tail of over something 15 to 1,700 of LPs that have just done 1 or 2 investments. And so, you know, clearly the market needs a lot of maturing, and, you know, Ertan talked about some of the issues of the family offices. It's surprising that the majority of LPs out there have just done one fund, and I think it's just the case of, you know, the VCs pitched them, they've got lucky, and they've convinced them to part with their capital. So I think the only thing that we can do is try and increase that graph to make it more of a, you know, a normal distribution rather than this cliff, that beyond, you know, the EIF, the BBB, the people we've got on the panel, and, you know, a dozen others, that's effectively we try and make it so that the population of LPs is actually much more spread out, which I think will solve part of that problem. But on the emerging fund manager side, this is something that we do a lot of work with, and actually we find that the reason why LPs are so interested in them is because often, you know, a lot of the data suggests that they perform better. I'm sure Ertan's got lots of information on that, and the British Business Bank obviously produce in the UK, the biggest LP in the UK, produce a lot of information on this. So I think the data is there to show that the returns are there, but more importantly, I think you know, it's about the hunger, the need to prove something, you know, and the generation aspect. And I think you see that when you speak to emerging funds. You know, they're out, they're networking, they're at events, they really try, and they're building a brand. And so I think as a result of that, and you know, we talked about the democratization of founders getting into VCs and the emergence of new funds, all of that I think will solve the problem naturally. So generally I'm optimistic on ESG because of the founders, and optimistic on the emerging funds because of the trends we're seeing and the general democratization of venture capital.
Ertan, maybe we can jump over to you to talk a little bit about how you think that LPs can effectively engage with these emerging managers.
So again, I think I talked about it in the beginning, about, you know, the sophisticated, unsophisticated, etc. But our long-term mission was really, when I started in 2018 and left the family office I was working before, where I built my first portfolio in emerging managers. The idea was really to democratize the access to this, to a diversified portfolio of emerging managers, which I think still most family offices or institutional investors are not able to do it themselves. And it's today, compared to 5 to 10 years ago, much more difficult to build that. Why? We have probably 10 times more emerging managers today raising funds. So if you want to screen those, you need 10 times more resources to screen those funds. You know, we get like 10 decks a day, and that's our main job, to do nothing else than look at those and then speak to a few of them, build an opinion, and select and do due diligence and invest. That is our daily job, right? For a family office, this is very difficult, and that's why I think I still think, and I don't want to speak about the emerging manager part too much, because that's, you know, I'm always talking about that and the benefits, but in very short, as Jonathan mentioned, emerging managers are small funds which perform better, are investing because of that very early, which, if you have the right companies in the portfolio early, is just a much higher multiple. And third, there is what also we call hustler mentality. You know, if you have a first fund and it's a small fund and you're not getting rich from the management fees, you hustle to prove that you are a good manager and deserve to raise a second fund, which might be larger, right? So these are the three things why we think still this is a niche that works extremely well. But it's also a niche that is extremely transparent for most of the unsophisticated investors. How do you want to screen 1,000 new funds every year? It is impossible for most of the family offices. And that's why we think it's not an asset class like other asset classes where it's easier to get that kind of access. And it's also an asset class where you can do things wrong. It's not like that all funds will perform evenly, right? We don't have that even distribution in venture. It's completely the opposite. You have a few funds that will distribute a lot or generate a lot of returns, and many or most of the VC funds will not generate any returns. So for a family office or an institutional investor who wants to do that themselves, without having the understanding and the resource and the people, the probability of adverse selection is very, very high. And that's something I think We are still, I'm doing this now almost a decade. I've started investing in 2012, 2013. It's now 2022, and I still see the same problems or same issues accessing that asset class, especially in Europe. It's still like people are not convinced, yeah, we should not only invest if I'm based in Germany, only invest into 1 or 2 German funds. And if I'm in the UK, only invest in 1 or 2 UK-based funds. That's not the case. If you want to really do venture and emerging manager venture, you have to go into other regions. You have to try to get deal flow, from Eastern Europe, from Baltics, from the Nordics, from Southern Europe. I'm only talking about Europe. And then do your bets in each of that region. Do your bets in each vertical. We talked about climate. We have not talked about crypto. I think crypto is one of the best performing venture verticals in the last 3 years. So if you have not deployed into that area, you've missed a lot, right? From that super returns. And that's the kind of thing. And maybe the last thing that I want to mention that is always forgotten is we are probably in one of the best times for venture. And we have seen one of the best decades in venture, especially in Europe, probably the best decade ever in venture. This will not stay the same all the time. So venture, as other asset classes, will be cyclical, right? So we will see also worse times. And so what we always recommend to anyone allocating into venture is think super long term. Don't try to market and time that this ecosystem, because it's almost impossible to time it. You can't do just because you see today everything is going well. Venture is a long-term game. If you invest today, you have to wait 5 to 10 years for exits. So in 5 to 10 years might be completely different scenario. So what we say is invest for the next 2 to 3 decades to allocate into that ecosystem. And I'm not reinventing the wheel. If you look at Yale Endowment, which is very famous, for their allocation over decades into venture, that's how everyone should think about allocating into venture. If you're a family office, if you have money, allocate 5 to 10% over 3 decades into venture, and I promise it will be probably a very good asset class compared to other asset classes long term.
Strong pitch, Ertan. Ian, maybe you can close us out by just telling us a little bit about how you see the emerging manager question.
Of course. So, and although we've performed that analysis ourselves around the data of performance of first-time funds, it's clear that they outperform relative to the rest of the benchmark. But also, it's important to highlight, I think, that in that data, the variance around the mean is greater. So the chance of you investing as an LP in a manager that is emerging and it going worse than you would see around the mean is also, the extremes are greater, is what I'm trying to say. Mm-hmm. So it's important to still have that kind of clear ability to pick managers based on a couple of things, right? So the way we do it when it comes to emerging, and our, for total clarity, our emerging manager program on our side is, it's fairly underdeveloped today, and for a lot of reasons, we're kind of like a startup ourselves in a way, and we've had to build our portfolio by focusing on certain things. But where we have actually engaged with emerging managers, the question is always, the first question we ask is what is your, is there a track record there, for instance? And it doesn't necessarily have to be through being in that particular fund, right? You could be a prolific angel investor who's done a lot of different things before you started up this fund, or you maybe have worked with a fund before, and while you were over there, you were doing lots of really interesting things. So those are the kind of questions we ask. And if that's not there, for us, it's typically a little bit harder to get comfortable because there's just no data, right? There's no proof points. But there's other things you can think about. So, for instance, what does that manager bring to the table that we cannot find in other places which already have those proof points? So again, coming back to the USP point, what is their unfair advantage? And if you're a seed investor, for instance, that might be your operational experience. Maybe you've done some really, really interesting things in the past where, maybe you were some very high up person in Google and you have an incredible amount of access to through your network there. So looking at networks, looking at, their past operational experience may be really, really valuable. And then, if there is kind of a, let's call it a track record in the past, it's just kind of seeing whether they had that that ability to consistently pick things that delivered outsized returns over time, even as an angel, even as just a principal in another fund. So forming a view on those things we think are really, really important. I just want to touch a little bit on the point that Ertan was talking about and John earlier about kind of the educational point around LPs not fully understanding the asset class. Whenever I sit on advisory boards and listen to what people have to say, often when you hear family offices speak, sometimes the first thing they'll ask is like, okay, when are we getting our cash back? And I think when you invest in venture, you really, really do have to take that long-term view. Investors are used to, a lot of people are very focused on IRR, getting their money back as quick as possible, but that's not how this works. And so for you to actually reap the benefits, whether you invest in emerging managers, established managers, all those things, at the end of the day, you need to be in it for a long term and you need to put money in consistently over time. And I just want to stress how crucial that is. Don't expect your own money back in 3 years. It's just not going to happen. So yeah, I thought I'd just kind of reemphasize that point.
Sage advice. Well, I think we're out of time, but thank you so much to all three of you for your insights on this topic. I definitely learned a lot, and I hope everyone enjoyed the conversation as well. Thank you so much, Ian and Ertan, for joining us from virtually. Thanks so much, and thank you, Jonathan. See you guys.
Yes.
Thank you very much. So guys, we try to talk about venture capital and LPs, and now we try to be a bit more decentralized. And in case that you're interested to know what's next in the world of crypto, you would be on a good treat, and hopefully you're just going to have a bit of more context in the whole story. Any of you guys are inside this industry, like blockchain, cryptos? Okay, I have a lot of lights in my face, so I'm not sure exactly if I see everybody. But I'm sure that Kamil, the CEO of Expertise, is going to have a full knowledge regarding this topic. He's going to have hopefully enough time to explore all the opportunities that like you guys need to explore, in detail. So I'm not going to take more of his time. And with a round of applause, please let's just welcome Kamil on the stage.
Hello, everyone. Nice to see you, everyone here. Okay, so my name is Kamil Pszorski, and I am founder of Expertise. The shorter way to explain what is Expertise is like the centralized consulting agency, I would say, that tries to capture the wisdom of the state of the wisdom in the world at the current moment. So something what thousands of people in crypto thinks about certain thing in this current moment. Please follow us on expertise.io if you are interested on that topic, and also you can follow me personally. And of course, my presentation is not a financial advice, so make sure you do own your research and consider risks in trading cryptocurrencies, because the risk is high. So Expertise mission is to collect the centralized wisdom and make it universally accessible and trusted. And how we do it? So the idea is that we have 1,000 of Expertise members that participate in the wisdom collection within 24 hours. It means that we receive hundreds points of view, and our community also doing the curation. Of course, they are rewarded with the cryptocurrency because this is decentralization, and everyone is motivated in their own ways. So those people are, some of them spending like 15 hours per day just analyzing the space, and we trying to capture then summarize in a quantitative perspective the wisdom and qualitative perspective the wisdom. So everything here you see is created by our community, and they are incentivized by a token. So why it's worth listening to me anyway? So I have traction in joining trends early. For example, I was quite early able to join development of React.js, and I capitalized. I created a software house, which later was sold, and I was a Quora writer with over 1 million views, which I am surprised that I was able to get so many views on that niche topic. And later on, I wrote a book because of that. I was able to join early. So how I try to evaluate if some technology is good for me to join. So there are two stuff. Fundamentals, of course, if the technology is 10 times better, fundamentals and so on. So this is the most important stuff. And of course, not every product can reach the market. So the second question is if there's any kind of marketing behind. In this case, the Facebook was behind React.js, so I thought, okay, there is just few hundred people in the world doing that, but what are the statistics on Reddit? Yes, so I saw that on a weekly basis, a lot of positive new developers were joining Reddit, and I was able to make my own decision to 100% go this direction. Little bit different story with crypto. So I learned about crypto 10 years ago, and back then it was also very early. I started later doing some ICO investments. This is why I'm investors here. And basically, I was able to launch the company, and we did our own ICO. I was using quite early decentralized wisdom. I was following MakerDAO, which is decentralized lending since 2017, the development. And currently, Expertise is trying to collect decentralized insights from all over the world about crypto. And this is, I think this is a good way to evaluate that I am probably a good person to present that topic for you. So I still believe we are somewhere in the institutional investor phase, even if there was boom and bust in 2017, and there was a big rise in prices last year. I still believe current level prices are good for institutional investors to onboard. And especially that, like 4 years ago, I really didn't see any VC who was interested, especially in Poland, about crypto. They were anti-crypto, and now they see that their kids are interested in crypto, and so on and so on. So I still believe we are not yet even finished institutional investor onboarding due to this chart, and also there are many geopolitical tensions. It means, for example, weaponization of US dollars and so on. Yes, your credit card doesn't work. It worked yesterday, tomorrow it's not working. There are many stories like that. And crypto is helping people not to be homeless in many stories in the recent months. Especially, for example, that Airbnb is starting accepting also cryptocurrencies. So you probably this or next year, you even don't need to have US dollars to don't be homeless if you have crypto and there are some geopolitical tension in your region. So what's next in crypto? So this is just from the history standpoint. So every 4 years, from the historical standpoint, there is Bitcoin halving around 4 years. And it means the supply is cut by half. And from the historical standpoint, it takes around up to 12 months to people on the exchanges react that, okay, supply really is much lower than it was, I don't know, 1 year or 2 years ago. And price is going up, yes? So we're trying to cover those fundamentals events in crypto. We're doing this kind of puzzles. This is really, this picture had in it private key with thousands of dollars, and it took, for example, for Bitcoin halving in 2020, almost 1 month to solve the puzzle, and someone from Romania, I do believe, solved that. And the last year, there is the new meme going on in the crypto community. They call it Ethereum triple halving, and it's more complicated to explain than Bitcoin, but in general, the supply will decrease this year after the merge, Ethereum merge. You can also check in Google what I'm talking about, by 5 to 10 times. So every 4 years, Bitcoin halving was 50% cut of supply. Here will be up to 90% cut. So this is not financial advice, but it's from what we see in the past. It's good probably to know about this event as well, that it will be happening. So how are trends anyway developing? So in crypto, at least, I don't know other industries, there are narratives. So for example, in 2013, there was narrative, okay, Bitcoin block is every 10 minutes, so I will fork, copy, paste, and change that block will be mined every 2 minutes, yes? So, okay, I will make a bigger size of the blockchain, and like most of those tokens and protocols are almost dead, or are not popular at all, almost. So every few years there is new narratives. Of course, there can be multiple narratives at the same time, as we can see later in this presentation. And probably the biggest game changer, and I will cover that in this presentation, is smart contract, which was launched 2015. Ethereum launched, and it was some kind of game changer. So back then, the first NFTs happened. So the first project that was happening was before CryptoKitties. It was called CryptoPunks, and then founders of CryptoKitties decided to do kitties, and it came up that kitties are very popular, and it even started to clog the network, and there were first scalability issues. And there was the ICO mania as well, many utility tokens, like many of them, created the product, but there was no product market fit. But some of them came up to be successful, and those funds got a new era, a new narrative for crypto, because for 2 years there was a bear market. So there was in 2020 they started so-called DeFi summer, because many DeFi projects started to be production ready. And then there was the constipation of Ethereum network. So it came up that there are so many use cases and users, and at the same time, like many people try to do different stuff on the network, that it created gas problems, and it was good opportunity for new competition to come up, like Binance Chain, Solana, and so on. I will mention about that on the later slides. So of course there was the NFT growth and so on. There was DeFi. So the DeFi summary was 2020, and whole 2021 the DeFi still was growing, and there were like many use cases, like derivatives, decentralized loans, decentralized market making, automated market making. So there were many use cases, and people still trying to do new use cases every month. And we're trying to cover that everything on Expertise, because we were covering that also in 2020 in December. So that's one of the first of our wisdom collections. So we covered back then quite early the projects that were going to be big next year. So many of our community members were very happy that they were part of us and thanked us and so on. So if you want to know earlier than others, you can create an account. It's free of charge. And you can also participate in the community, get rewarded with the cryptocurrency, and everything is very simple. And only thing you need to do is to join and check out, and to wait for some stuff from us, wisdom collections I'm talking about. So then NFT after DeFi went crazy. I don't know still why NFTs, some of them are so much expensive, but I can tell you why they grew in terms of users. Because in 2017, 18, even 16, many influencers tried to join the crypto projects back then, but when they talked to the lawyers, hey, I want to promote this project, all the lawyers were saying, especially in the US, don't do it because it's potentially, you can, financial instrument and SEC can put you into jail for 20 years, so they basically didn't do anything. But later on, when because the first NFT were created in 2017, but some early adopters, influencers like Snoop Dogg and others, they figure out that NFTs aren't by the law cryptocurrencies. NFT are treated more like a license. So, for example, you have some actor working with CD Projekt to promote cyberpunk, and it's not a financial instrument, and the same way is NFT. So it has VAT on top of that in terms of accounting, and you need to pay taxes. It's not like a currency, it's more like a license. So this is why many influencers started, and then there was Doda NFT and so on and so on. So everyone joined, and like many people who tried to buy the NFT for the first time in the crypto, later on they got into rabbit hole and whole market grew. So we also covered that in March. So what else is going on? Just to show you. So we also join to be in touch with the reality of crypto market, because everything is changing very fast, and we try to cover that as much as possible. So also what happened is metaverse trend. So Facebook renamed to metaverse, and of course GameFi. I think those two trends and technologies are still very young. And the same way how NFTs were invented in 2017, some DeFi ideas were invented 2017, but it took like 3 years to develop something production ready. I do believe there is still a lot of way to go for GameFi and metaverse. So we will see a lot 2 years from now, a lot of 3 years from now, new cases, and a lot of sources are trying to find where we are and so on. And as I already said, I do believe that institutions just started onboarding maybe last year, maybe 2 years, some of them 2 years ago. And we are probably I don't know how long, but there are some sources we are in around 1998 in terms of, so we have like 2 years to crash, I don't know, like a dot-com bubble. So also what happened last year, the Ethereum settlement network volume was surpassed the Visa. So basically that also a good indicator that this is not just stock, it's like real people usage, and people store billions of dollars on Ethereum network. So my personal opinion is that there is the power of law playing everywhere, not only in technology startups, without the token, also with the token. And I think that in some point in the future, there will be so-called crypto extinction moment. So like dinosaurs were killed by asteroids, there will be some kind of this moment in crypto, and probably decentralization will be the most important value. People will realize that not only fees and so on, especially that Ethereum is working on layer 2 solutions, and I think also that it will be very, very important thing this year or next year. And I do believe that Ethereum is at least 10 times more decentralized than Binance Chain and other competitors. So how we find and verify? So basically our expert team members, thousands of expert team members, you can become one, read different places in the internet. They spend 10 hours per day, and then we ask their opinion, trying to run wisdom collections, make quantitative and analytic and qualitative summaries. And if you are interested, we just launched a few days ago exclusive report, and we will be covering stuff like, and already covered, I need to read. So we covering and already covered, and we will be covering NFT, Metaverse, GameFi, DeFi, Layer 2 projects, further developments on DeFi 2.0, further developments of NFT 2.0, and if you want to get access to this exclusive report, you can download and access it for free. And basically, we're trying to bring all the decentralized wisdom into public domain. So in the long term, we plan to do it in the public domain for free. Thank you very much. I don't know how much time we have, but if you have a question, let me know after the presentation. Thanks.
So, how was the coffee in the morning? Good? Just want to make sure everybody is awake. And we're going to have a very interesting panel, one after each other. This one is going to be what investors need to know about the state of climate tech investment and opportunity for climate tech investment in CEE. So, if any one of you guys see that 1 week ago it was warm and then all of a sudden it started snowing and then another day it starts raining and then what's up happening, I think that has a lot to do with whatever we're doing into the, let's just call it the state of our environment. And I really think that without putting proper attention and a proper money in it, this is never going to be solved. So hopefully this panel is going to be one of those opportunities that we're all going to, let's just say, join forces and at the same time try to make sure that we're going to make a change. And just to say that, I'm not going to take any more time from this interesting panel. I would like to introduce Eleanor just to come on the stage. And I can see that Eleanor is, is staying outside. So I'm just going to make it in a way that we're going to have, first having the whole setup here. So the good news is that we're going to have people from corporations, from the banking, from investment, from media, so we can try to explore, let's just say, all different aspects that is really needed to put as much, let's just say, attention to this whole ESG and the climate tech. I even like the fact that there is a word climate tech, and we just, try to make it as important as it is right now. So it's not always about, like a fintech and, let's just say, things that they are a little bit more closer to the financial aspect of that. And so if the stage is fine, maybe if Rosie would be able to just ask Eleanor to... Yeah, okay. Very good. So we're going to have Jose Miguel Salazar from, he's a manager at CEE ESG Hub in PwC. We have Yannick Muller, that he is representing the Villa Finance. And we have Michał from BNP Paribas, Carolina from ICOS Capital Management, and of course, Eleanor is going to help us just to have the whole thing. So you have your microphone there, and stage is yours.
Amazing. We have an awesome panel today about climate tech. We're going to be talking about climate tech in general across the world, and then also some opportunities in CEE. Guiding all of you through this journey of the conversation will be yours truly, Eleanor Warnock. I'm deputy editor at Sifted. We're an FT-backed publication that covers startups and scale-ups in Europe. And actually one of the big verticals for us in our coverage and something that our readers love is actually climate tech and sustainability. So I am very excited for this conversation. I think that we're going to start off with a little presentation from Jose.
Hello, everyone.
Jose.
Hi, can you hear me?
Yeah, loud and clear.
Oh, great. Good morning, and happy to be here. Thank you so much for the invitation to the organizers and It's a pleasure to be joining virtually. I wish I could be there in Warsaw, but must say that this week, I've been in Lisbon having a very interesting conversation with colleagues at the European and Middle East level in terms of climate change. So, very relevant topic for today's discussion. And before we start, just a quick introduction of myself. I'm Jose. I'm based in Warsaw, manager of the CESG hub for Poland and a network of 29 countries. And I'm responsible for driving strategy and transformation related services with a particular focus on net zero. So for today's presentation, it's going to be fairly short. It's going to be meant to be like some background for the conversation that we will have. And I will just share with everyone some of the key findings of our PwC global research in terms of climate tech investments around the world, as well as doing a small zoom in terms of some of the key trends that we see in terms of the concentration of those investments by sector and also by territory, as well as to finish up with some potential untapped opportunities that we see across PwC. So climate change is increasingly getting into the minds and, of course, the conversations and the actions of investors. There's a number of megatrends that they've been converging, and we see these as a stark reminder by the IPCC, which is like the UN body responsible for presenting climate related research and also advancing science in this front. Just got published a new report that we're seeing that the window for achieving like the 1.5-degree goal in terms of like what the scientists recommend, that it's where we should not exceed, not to enter into any sort of existential and irreversible risk. We're reaching to that tipping point. So there's a number of risks, physical risks that we're already experiencing today. They are increasingly going to be experienced in the future as well. And then, of course, there's also the topic that we need to decarbonize our economies, and that also exposes us to certain transition risks. We see a lot of rise in terms of net zero pledges, private sector, public sector, investors alike. Currently, more than 90% of the global economy has some form, is covered by some form of net zero pledge. Many of those are still yet to be science-based or to have like a definite action or concrete like roadmap and action plan. However, we do see that there's the interest and, of course, increasingly commitment in terms of this area. Last year in COP26, more than 130 trillion of capital was like committed from the investment side. And then, of course, here in the region, in the European Union, and also like wider CEE, we're seeing that in terms of the Green Deal, the impact of the regulation, which is very ambitious, aiming to decarbonize the European Union and make it the first carbon neutral continent by 2050, essentially will imply reviewing all the laws, all the legislation, and make a systemic transformation across all the sectors, which, of course, all of these, let's say, are certain pressure points. But then on the opposite side, we also have like the opportunities. At PwC, we're seeing like unprecedented level of growth in terms of climate tech. Just in the last 8 years, we have seen more than 220 billion USD that has been mobilized to be invested in climate tech startups, and especially like in the most recent time, in the first half of 2021, we just saw 60 billion being mobilized in that particular segment. So at PwC, every year for the last 2 years, we've been conducting research, identifying all the climate tech startups around the world. Latest one, we have identified more than 3,000. And overall, the things and trends that we see is that funding levels are showing accelerated growth. That comes in the number of deals as well as the average size of those deals. And if you can see here in the chart, you will see how the graphs, the concentration seems to be increasingly growing year by year, especially like every half of a year. There's also some distribution by sector. I'll show you in the next slide. And then in terms of what I was mentioning about the average deal size, how much is growing, it's a very significant growth. Just in the last year alone has like more than quadruple. And currently, for every dollar of BC invested, 14 cents are basically invested in a climate tech startup. So there's a lot of attention into this space, as well as investors are increasingly looking to diversify into these kinds of portfolios. And now this is some of the most, I would say, relevant or interesting things that we can have to kickstart the conversation, which is like, where's the concentration of these climate tech investments? And we see that most of the investments are actually in terms of the future of mobility and transportation, as well as the energy. And there's much less concentration if, let's say, traditional sectors like industry, manufacturing, and also the built environment and cities. Um, there's also some overlapping solutions, software as a service, also carbon offsets that they might apply to different services. That segment is also receiving increasing attention, also increasing investment. And in terms of where these investments are located, they are clearly majority US based. Nearly 65% of the capital invested has been invested in the climate tech startups in the US by US venture capital. However, we do see a very significant growth as well in Europe, China. And if we look at, let's say, the 10 largest investment hubs, it goes 50-50 in terms of the US and also US and North America, and also Europe. This also reflects like the level of maturity in terms of the startup ecosystems as a whole, and that's also one of the major reasons that influences. And then this is also something that we are seeing in terms of PwC, of what can be like a potential opportunity of untapped capacity for achieving significant returns, as well as significant positive climate impact, as well as decarbonization, which is currently the amount of capital is concentrated in few sectors. However, if we will look at it like on the left side and you see the share of global emissions uh, broken down by sector, actually we are seeing that there's a misgap. About 25% of capital invested stays with what could be 80% of the solutions in terms of like addressing climate change, which on one side represents a missed opportunity, but on the other hand, it also represents like a potential opportunity for the future, for areas of growth. And then the other topic, of course, is for all these different climate tech startups and the solutions that they offer, their technologies, they have different levels of maturity. Some of them, we see them like significantly more mature, like let's say micromobility solutions, solar powered, which is reaching like a very high stage of development. However, in terms of other things like low greenhouse gas emissions shipping, uh, we're still not there yet. We still haven't passed the breakthrough innovation point, and this could be something that there could be untapped opportunities in the future. And just before I close this presentation, just wanted to leave here a small reflection of the thoughts of an infrastructure investor from interviews that we have had. And the truth is that, of course, this is something challenging for investors. Investors alone cannot do it as well. There's also certain role that collaborations and government as well needs to play in the middle of all this as well, to help to alleviate or share the risk taking and help those technologies to pass the breakthrough innovation point to further like scale ups in terms of maturity. And that will be it for my presentation. And just to say something, we'll be really curious to know your thoughts about what do you see in terms of this space for the CEE region. Thank you.
Thank you, Jose. You set us up super well with a good overview of what's happening at the global level. And now I'd like to jump into the conversation and take us down, as you just said, into the CEE region and talk about what's going on there. Maybe you want to kick us off, Carolina, about what are you seeing here? How does that compare with what's happening at a global level?
Sure. Thank you very much for letting me start this, Eleanor, because we as ICOS are a fund that is investing both in Western Europe and Central and Eastern Europe. So we clearly see the differences, but they are not really coming down to the trends. So in terms of the global trends, you see pretty much the same trends in our region. So basically, there is also more and more startups emerging in the climate tech space, especially when you look, for example, into mobility, industrial solutions, AI data-driven solutions, or food tech recently especially. So those solutions are emerging. However, when compared to Western Europe, they are much more earlier. So you just see the founders starting the ideas, or you see the scientists going out of universities, building the projects, while in the Western Europe, those kind of companies are already attracting Series A, Series B funding. So we are definitely earlier in the process when it comes to the development of the market. But of course, this is not a thing only typical for climate tech, but probably for most of the markets. So I would say this is the biggest difference, but in terms of trends, it's pretty much alike.
And just to follow up on that, what do you think needs to happen in the region for there to be more capital accessible to these founders and more resources for them?
Yeah, I think definitely more market maturation and especially better networking, because something that is especially painful, I must say, even for me, is that very often, for example, I'm getting asks from foreign accelerators or competitions that are targeting climate tech startups, and they have this struggle. Even like the one of the organizations where I'm a curator, they have this competition for deep tech startups, even very early companies, and they have many applications from Western Europe, many of them from US, some from Asia, and from CEE region, almost nobody. And they are asking, why is that? So one of the things is that we are still not really well networked. So I feel our funds needs to work on that and really make sure that they are building the connections, and then through that have better access to funding and other opportunities.
I think that tees up, Mikhail, you very well, talking about the role that corporates can play in also helping these startups bringing technology to the market. Can you talk a little bit about how BNP Paribas is doing that?
Sure, thank you for this question. So, building on what was said, I think what we are lacking is commercialization. So clean tech, climate tech is nothing without the industry in which it's working. So you cannot do mobility without moving actual people or goods across the world or Europe. And in order to do so, you cannot do a startup that will provide mobility. You must provide technology for other companies that will actually move the goods if we are focusing on mobility. So you need a partnership with big corporates which are acting on many markets. And one way to do this is corporate incubator, accelerator, partnerships with VCs or international programs. And other thing is own scouting. So if those clean techs and climate techs would be considered eligible for green funding, like loans we are granting to our corporate clients, it could be a great boost for them to be implemented, commercialized, take other from universities to the market, because it would show the right way that there is an impact, but also the money, not only the idea.
Can you talk a little bit about how you've worked to facilitate those relationships between startups and corporates, and maybe are there interesting examples of technologies that corporates have adopted?
We are still looking, frankly speaking. In France, our colleagues, I believe, invested quite recently in one of such startups that is assessing the carbon footprint based on the satellite imaging. There are some programs, but I think we are still before big announcements. So we are still looking for some companies that could implement solutions to corporates, so we could finance this implementation on a large scale and also make an example out of it. We have programs. So now we are financing, for example, energy transition. energy efficiency. We have ESG-linked loans. And these programs, this financing is open also for startups and scale-ups which would like to implement. But as Carolina said, we are still missing those companies, especially in Central and Eastern Europe.
Yannick, maybe you could talk a little bit about how you see this as an investor from outside the region. How do you think investors can identify promising startups in the sustainability or climate tech space? And maybe what are some mistakes that you've seen investors make?
Well, I think first upon touching on your point about the network, I think it's super important that the network is there, that investors from other parts of Europe connect to investors from Eastern Europe. Conferences like this are super helpful, so I'm really happy to be here and learn about the Eastern European ecosystem and learn about what startups are there, what investors are there, and expand this network. So I think this is one really, really important factor. I don't think I want to speak about mistakes that others make. Yeah, everybody's still learning and improving their own strategy. One thing I'm seeing myself is, which is also applicable to us, we are very much focused on software solutions, which are usually enablers to save the climate, but probably you cannot save the climate just by investing in software. There also needs to be a hardware component. Hardware components, for example, packaging is one really important field where there's super interesting startups coming up with algae packaging to get rid of plastics. On the software side, I see more enablers, as I said, for example, enabling people to drive electric vehicles by having a map of charging solutions, etc., creating marketplaces. I can give more examples of this. But this is something that I see that, probably you cannot just save climate just by investing in software.
And how do you, as an investor, evaluate the sustainability or the impact of the startups that you're investing in?
Yeah, that's a very, very good question. And I'm talking to other investors how you can do this, and I see it's super difficult, especially at early stage. So you see some approaches for later stage corporate companies where the corporates have information about their supply chains, about the products. They know more or less how much greenhouse gases or CO2 equivalents are being created, and then they somehow can measure it. But especially in early stage, you have a very big problem estimating it. And from my point of view, it is just one thing to look at when you evaluate a startup in early stage. There are more important factors, such as, are the founders able to deliver the vision that they're believing in? And I think if they're too much focused on measuring the impact at the very beginning, they're not going to get running. I think it's more important to get into the system and do something. I think also a lot of corporates even have problems measuring their CO2 emissions or greenhouse gas emissions. So for the early stage, it's super difficult. And I'm super interested if anybody knows a tool or whatever to measure this better, please come and talk to me. I did a little bit of research on this. I found there's one tool called Crane. Maybe somebody has heard of it. There, I think one problem is when you have to do the inputs, you have to know what are the greenhouse gas emissions. You don't know it as early stage. There's one approach by Planet A Ventures from Berlin. They came up with a really interesting solution to measure the net impact. So in theory, it makes sense where you say, okay, what are the emissions pre the technology? What kind of emissions am I creating by avoiding this per unit? Then I have to multiply it by the units that I'm selling, or then I have to know how many units am I selling. So there are so many variables, and I think we're still quite far away from the point where I have one framework where I can easily measure it. But super happy to also hear other thoughts about this and learn more.
Yeah, definitely. I mean, I also want to know. Sifted should be writing about those technologies as well. Jose, I want to come over to you and ask you, what do you think that the experience in other regions can provide as kind of teaching for CEE in nurturing a climate tech ecosystem?
Sure. Thanks, Eleanor. I actually echo a lot what Yannick was mentioning in terms of the that everybody's still learning. So there's lots of things that could be lessons learned, and of course things that maybe have been I will not say mistakes, to be honest, because things that tend to happen like that because of, let's say, for example, investing in startups that they have like higher level of maturity in terms of technology, and of course that we need to assess the risk portfolio that they have. But one thing that I will say is that in the past, let's say, just looking at our analysis, the last 10 years, it's a very different period than let's say, the next 10 years. So, for example, for many investors in the last 10 years, it has not been common or mainstream to take climate or carbon consideration in terms of like the investment process. But in the future, that's going to be increasingly more common. And nowadays, for many investors, it already is. So, of course, the way that how certain investments are going to be taught or evaluated is going to be influenced about that. And I'm also going to mention a little bit about that. Yes, like the measuring part and the managing, it will not reach to the decarbonization per se, but it can help us to understand it and track it. And then, of course, that for addressing climate, there's no like silver bullet. Like we literally need to move in every single front, and that's what's going to help us to achieve the decarbonization. So if anything, it will be to encourage investors and also startups in the region to think beyond those, let's say, more traditional sectors and solutions where the capital has been deployed, and also look at those that they also have higher potential for decarbonization, because there's also going to be some other forms of support, like eventually, like we're seeing everything that's changing due to the Green Deal, state aid programs, certain benefits. Eventually, we're going to get there. We even see it now with the impact of the war in Ukraine. That's also going to accelerate the transition to renewables in the European Union, and as well, like the increasing pressure in terms of like addressing the different kinds of climate-related risks.
Super interesting. Yannick, I wanted to come back to a point that you also raised about how obviously the technology that's going to help us deal with the climate crisis isn't just going to be software, it's going to be hardware as well. And that comes with a whole new set of challenges in terms of financing, right? And you also have these climate tech startups that are building technology that might not even be like fully commercializable for decades or a long time. So I'd love to hear from maybe you both, Carolina as well, how you see the kind of financing that's going to be necessary to bring these new ideas and technologies to market.
Maybe one point that I thought was really interesting, looking at the PwC report, was that the investment size per investment almost quadrupled. And I was wondering, is that because more investments are being done into more capital-intensive business models? So are we already moving there? And this would already be a great indicator of an improvement of the situation. Maybe Jose has more info on that. That would be interesting to see. But right now, one other interesting factor was also that most of the capital is not going into the startups that have the highest impact on climate. My hypothesis is most of the capital is still going into those startups that have more financial impact because it's easier to measure, as I just said. And I think those are the 2 points we have to look at here.
Now, what about you?
Yeah, I would agree that we are slowly going there because usually, of course, majority of the funds, they love software B2B SaaS solutions, but I fully agree those are not the solutions that will save the world and will reduce the CO2 emission, at least not on a physical level. They can always count how much is emitted to some blockchain for this, etc. But at the same time, we used to see a lot of funding going into those kind of startups, but recently we observed some really big rounds going into more climate tech-oriented startups. Even from our portfolio, recently our UK-based startup, Carbon Clean, they closed 100 million round. I think like 3 days ago, another company, Climeworks, they closed 650 million round. So we see those rounds coming, and I assume each of this startup is capturing CO2. Carbon Clean is doing it from the point of emission, while Climeworks is doing it directly from the air. So those kind of technologies are attracting the investors more and more, because there you have the financial benefit from the investment, very often going hand in hand with the climate impact that those startups can make. So I believe it will attract more and more investors, especially that you see many LPs also pushing for their funds to be more sustainable and invest in such ideas.
Jose, maybe you could speak to that point about the actual round size increasing. Did you have any data about that or view on why that's happening?
Yes, sure. Thank you. And thanks, Janek. I really appreciate the question. So the thing that we're seeing is that, let's say, where those rounds, in terms of which round they come, increasingly they come like more Series B, Series C, pre-IPO, and to a big extent also through the special purpose acquisitions, SPACs. So this has also become like more, let's say, a series of rounds, and also types of ways of how the more funding is coming as well. So there's comparatively less. There's still some, but like compared to pre-seed stage or like the early stage funding, we see it more like at, let's say, at more mature levels, and then capital coming is considerably much more.
We are closing in on kind of the end of the conversation. So I just wanted to end with a question kind of for all of you, which is just super open and very simple. What are you excited about in the climate tech space over the next 12 to 24 months? Can be a sector, can be a trend. What are you I'm excited to see this develop. Maybe we'll start with you, Yannick.
Thank you. Maybe two things that I already touched on previously. So I think when we're talking about hardware, this whole topic of packaging is super interesting. There's one startup from Hamburg, for example, called 1.5. They do they enable research teams to work together with corporates, because we also talked about this. And they ask, okay, what are your challenges in terms of packaging? How can we help you? And they build plastic alternatives based on algae. They even have those algae farms where the researchers are able to research and look into different solutions. And I think this is a great approach to empower, enable researchers beyond university to look for solutions for corporates. So I'm really excited about this one on the hardware side. On the software side, I'm right now looking at one exciting solution in e-mobility, in the area of how can I educate people what is the right electric vehicle for them, and especially the right charging solution, because this is still very confusing for a lot of people. It's probably also giving, or they have anxiety to buy an electric vehicle because they don't know what is the right range for me, what is the right car for me, what is the right wall box that I need to install. So there's a lot of questions around this. And I think solutions like this can also accelerate the change from combustion engines to electric vehicles.
Those are really futuristic. I love it. Carolina?
Yeah, so personally, I'm really excited about two topics right now. The one is connected to the future of manufacturing, which I truly believe lays in the biotech space. So I really look into ideas of precision fermentation, synthetic biology, cellular meat. So everything from IT solutions, modeling that, to bioreactors and new technologies here. And the second topic would be around the partially CO2 emission counting, but rather the supply chain traceability and visibility, and to count how much CO2 is really emitted from the very beginning of the product creation up to the point when it is recycled. So those two topics are pretty hot for me.
And Michael, what are you excited about in this space?
I would say two things. One is very simple. So the energy transition. We cannot continue, from obvious reasons, to use gas or oil. We have a problem on the pan-European scale, how to supply enough energy for all these inventions you are also excited with. So I would say this is the beginning, how to supply the energy, renewable, clean energy to make all this stuff work. So this is, I would say, a grim problem for the nearest future. And on the bright side, I would say I'm very excited about the development of 3D printing in a wide range, biotechnology, but also production, what kind of impact it will have on production, manufacturing. It will be centralized, decentralized. What about supply chain in 3D printing? So this is a very near future, I believe, and it is very interesting for a more philosophical discussion.
Definitely, for next time. Jose, maybe you can also say a little bit about what you're looking about, maybe in CEE, what trends you're interested in and excited about.
Sure, thank you. Well, right now, one thing that we're seeing a lot is, let's say, the impact of the EU Green Deal, different levels, private sector, public sector as well, and of course, all to all the different stakeholder groups. So I think something that's really interesting is that now this kind of actions is becoming increasingly mainstream in terms of like it's going to be addressed, what, why, and we're moving from the what, why to the how, which is of course the difficult part. But I'm excited that, let's say, the next 12 to 24 months, we will see, let's say, more collaboration, especially cross-sector, as well as, let's say, cross-stakeholder group, because ultimately that's what's going to drive the innovation that is really required to both bring the innovation, the technology, and ultimately the innovation that is really required, right? And then, Eleanor, if you allow me, actually, I would like to briefly share something in terms of like what we see from PwC relevant to this conversation. Just one quick slide, which is about what you were mentioning in terms of the CE, that we can see a lot of, let's say, more mature markets, or let's say more developed climate tech ecosystems. But we also need to see that in their case, let's say the very beginning has been like a lot of concentration in pre-seed stages of venture capital. Now a lot more, like to echo like the question that Yannick asked, has been more in like Series B, C, and close pre-IPO, but it has stagnated the pre-seed. So we need to or move in all fronts so that we can see the progress that is required, and of course to capture all the opportunities, financial opportunities. And something also that here at PwC we're very excited for the next couple of months. I'm very pleased and delighted to announce that we are going to have a close collaboration with Wolf Summit to identify the top 50 climate tech startups here in the CE region, for CE, by CE, and for all of the stakeholders here. So please stay tuned for more updates from us. And also, if you know any climate tech startup, like please share this announcement. We're also going to have like a regional chapter in terms of like what we do at the global level to see what's the situation here in detail, and then we can understand more about like how to grow this emerging ecosystem.
Thank you so. Thanks so much. The mic- Thank you for joining us.
So we're starting this time very deep. We're going to have a deep dive into a deep tech investing. So, I mean, it cannot be better than that. We also try to be more international. So we have 2 speakers on stage and 1 online. And it's a very interesting topic about a $10 billion investment. So I think that should be good enough just to leave the rest of that, you know, like for somebody who knows how to moderate it way better than me. So I'm not going to take your time more than that. And please just, you know, the stage is yours and good luck. Thank you.
Still go. So, hello everyone. Now with switched on mic. Thank you for joining us. And I can only guess how irresistible networking is here at the Alpha Summit. And this is why I appreciate everyone who is here. As the title suggests, we're going to dive deep into deep tech and examine, as someone said to me yesterday, how deep is your tech Central and Eastern Europe? My name is Irina. I'm the CEO and co-founder of The Recursive, media reporting on startups and innovation in Southeastern Europe. And here with me, I have 2 amazingly knowledgeable experts in deep tech. The first one is joining us virtually online, Michael Jackson, not the pop star, but the VC. He's bringing 20 years of experience in entrepreneurship and venture capital. He founded and exited 2 venture-backed startups, the first to Fidelity and the second one to Scripps. Michael is probably one of the most versed VCs in growth investments across a variety of tech businesses. 4 of them realized $1 billion of exits, both in the US and in Europe. Michael served on the advisory board of the NYU Entrepreneurship Center and its spin-off fund. He's also on the board of the Creative Destruction Lab, a deep tech accelerator whose portfolio combined a valuation of over $6 billion. He's also on the board of HEC Paris and its spin-out fund done in conjunction with the Université Paris-Saclay. Michael was third in the Telegraph's list of the 100 most influential technology investors in Europe. And he holds degrees from Princeton University, from New York University, and HEC Paris. Currently, in his role at Cottonwood VC, Michael is responsible for the pan-European investments in deep tech. Michael, I hope you can hear us well. Very happy that you're here.
No, happy to. I can hear you guys great. Happy to be here. I'm virtually kind of logging in from Paris. Yeah, wish next time I can be in Warsaw. It's a fantastic city, and I always enjoy being there.
Definitely worth it. The second speaker here with us today is Tomasz Wierzchowski. He is an experienced CTO and innovation leader in the fields of robotics and system engineering. Tomasz brings 10 years of experience in global tech leadership in advanced mobile robotics and autonomous systems. He's held various key roles across the full product lifecycle of both pioneering startups, award-winning scale-ups, and blue-chip corporates. He's helped them bring novel autonomous AI-powered products to a wide key of markets at scale, including industrial inspection at Aerotronics, construction at Oculo, agriculture at HBC, and consumer at Dyson, Bosch, and Emotech. Last but not least, Tomasz is on the industry board and a guest lecturer at his alma mater, Cranfield University. Tomasz, also happy to have you here with us. And before we start with our discussion, I believe that it would be useful for our audience to revisit the definition of deep tech. Somehow the distinction between shallow tech and deep tech has been blurring over the years, and I think the phrase was coined like 10 years ago. Now we live in totally different times. So, Michael, I'm going to start with you and ask you, what does deep tech mean today?
So deep tech is quite a nebulous term that it's kind of become a catch-all for anything that's not digital or software or online. So the term deep tech actually goes back. It goes far farther than 10 years. It actually goes back to the skunkwork projects of Raytheon for over 30 years ago. And for them, it was just kind of all the crazy projects that they were doing in-house with, in conjunction with the U.S. Department of Defense, Department of Energy, etc. For me, deep tech is just any really IP-driven technology that's at the cutting edge, which is leading. So I think that one of the problems is even in Europe, oftentimes most of the VCs are using deep tech as sort of a catch-all for anything that's not mainstream. And I was just sent a deck that was, when a European VC was like, "Oh, it's a great deep tech deal," and it wasn't deep tech. It was just a SaaS company with a thin layer of AI on top. I think real deep tech is IP-driven, often coming out of universities and research centers, and it's really about building the future and really being at the cutting edge of what is innovation and technology.
Thank you, Michael. Tomasz, I also wanted to ask you, because you've been practically working on deep tech solutions, how would you define deep tech, and would you think that we need a new definition today?
Yes. So, well, first of all, I would think why or what was the purpose for definition, where we are on the investing panel and conference. I'll focus on this one. So I pretty much agree with what Michael said. This is IP-driven. Sometimes you maybe call it frontier tech. I mean, this is like many terms. Maybe we should need a bit of rebranding. But I mean, from other perspective, it's also saying, yeah, IP-driven. So the primary risk, especially at early stages, it's on technology, less on the market. So this is IP-driven, technology-driven breakthrough. Sometimes you may call it. And of course, you would have many verticals and types within defined, going through industrial, biotech, hardware-driven, combination of all. You might have a much more sophisticated AI-driven machine learning, which might be falling into SaaS category or fintech. But I think real deep tech is IP-driven breakthrough science. That's how I would define it. And for the sake, I guess, of market also, investment, puts the other category, so very, very thin AI ML layer of SaaS startups in the more generic ecosystem. That would be my definition. Yeah.
Okay. I guess when it's also science-driven, the risks that an investor should take are much higher.
Or engineering
this is also
science or engineering driven. Yeah.
So from an investment perspective, I'm not sure that we still have Michael online. From an investment perspective, what would be the difference between, let's say, a fintech or a blockchain startup and a deep tech startup?
Okay, so I guess I will start.
So, okay, we'll have to move on to the questions to you. We'll come back to the investment topic and now look at deep tech from the founder's perspective. Tomasz, you have been observing a considerable brain drain in the Central and Eastern Europe from PhDs and also engineering talent moving to the US. And somehow you're still a firm believer that Central and Eastern Europe offers a unique opportunity for people like that to live here and to run their tech R&D and create their deep tech startups. Why do you believe so?
Yeah, excellent question. Yeah, so a bit of context, I think, how I would define the brain drain and how it evolved over, let's say, last 10 years. That's what I observed. So I've seen it firsthand. I myself moved to, okay, not to US, but to Western Europe. Also, I'm not a PhD, so I'm not a scientist. I'm a deep tech engineer, so roboticist primarily. That's my education, and that I would put these categories together with PhDs. This is just more for like bigger context. So when I talk now about this wider context, so first of all, I think we see a return, a wave of this so-called brain drain. So this is already promising. But even if we would not see that, we still have quite considerable talent, what we can call it now deep tech talent in the region, which still grows. Reasons for that are multiple, so I'll probably not go into this. But the bottom line is that, especially for deep tech, so when there is hardware or science component and software, very often, the talent arbitrage, this argument for deep tech in this region, in CE region, is absolutely massive. So when I say what I mean by talent arbitrage, that's actually a term I got from one very interesting article that we can maybe refer in future, from US VC, who's also active very much in deep tech. Well, pretty much there is motivated talent who sticks longer, and I will not say is economic, but it actually, you can run lean projects with it.
Okay.
R&D.
Okay. Sounds promising.
Yeah, and this is three big arguments already. Even it was not lean, but just the argument that there is incredible amount of motivated talent, specifically in deep tech, because software, of course, and still there will be more in software. But the science, hardware engineering, and the combination of those with software, there's extremely big amount of talent which is motivated. So this is primary. There are challenges, of course, regarding capital, market expansions, and the ecosystem. But I think those are the problems you can work with. You cannot work with problems with an ecosystem without talent. So this is one of the ingredients.
It's at the bottom of most of the things, actually. Capital follows talent. That's my opinion.
Yeah, so that's my overview. I'm sure, we can discuss further in next steps.
I actually have a next question to you, because you've been involved in already several startup projects in the deep tech sphere. What are the critical skills a team must have to be successful from a business perspective? Because obviously scientists don't always do good managers.
Absolutely. So, of course, big topic, but I'll try to be as concise and go into.
Maybe you can name the top 3.
Yeah,
yes.
I do have actually list for those. So absolutely, yeah. So a bit of context. So this is stage dependent. So it's a bit, maybe I'll compare to cooking. Maybe it's a bit long analogy, but maybe easier to explain. So at different stages of the startup scale up, you need all of the ingredients, all of the skills, but maybe at different capacity and maturity. So I'll name the ingredients, and then maybe you can stop at that. Maybe it's a different kind of panel.
Cook me a deep tech startup,
yeah,
please.
So, okay, so we have a product and visionary, product and vision. And sometimes it is sector related, sometimes it's not. But product and vision, this is one of the skill set that this is founding business, founder skill set. If it's CTO, CEO, probably CEO, that's one. And this is all the way through. So this is founding skill set. Then we have execution and operations. And this is leadership experience or having talent and advisors as well to get to this. Then we have business development and sales. Okay, now it sounds generic, but I will start with this because those are probably the ones that might be lacking in any ecosystem, not just, or might be easily overlooked by technical or science research founders. And business dev and sales development, and of course, market development. And then we go into core. So researcher and scientists, so actually where the IP comes from. So this has to come from the founding team or the core team. We are talking about breakthroughs, we're not talking about licensing an IP from university and then magically it becomes a product. We're talking about then the full life cycle development of either engineering or science-based products and business models. So this needs to be, and this has to have good mindset of commercialization. Or at least open mindset, not necessarily experience, open mindset, because then we have a last ingredient, which I think is very tricky. So it's engineering and manufacturing deployment licensing. Licensing is, let's say, in the, I would say it's optional or dependent. So actually the engineering, manufacturing, execution, which it will come later, but this mindset and advisory has to be at early stages. of either scientific breakthrough. And it's probably good to go for examples, but might not have enough time for those.
We would probably have enough time because I'm not sure that we will manage to solve the technical issue. So yes, I would be actually curious to explore a bit more the life cycle of a deep tech startup, because it starts in a bit different way probably than, let's say, a fintech startup.
Oh yeah. So okay. So small disclaimer. That's my recipe. From my experience, things I worked on, I tried to develop. It's not like state-of-the-art proprietary. It's also based on examples. So one example I can give. So this is public information I'll be talking about. CMR Surgical. So this is going for very hands-on. This company, they are developing surgical robots. So it's less of a scientific breakthrough. It's more of an engineering. But it's also, so this will be based on this example. I'll not go into biotech, it's not my space, but like silicon development, chip development will be another one. We'll see if we have time for that. So for CMR Surgical, they had all of the skill sets in the founding team from the day number one, but they were,
And when is the day number one? Does it start probably already at the university, or?
No, so it started out of university. So they are not a spin-off. There's no IP transfer to university, that's according to public information at least. They came up with a solution, a bit of context, to non-invasive surgeries, which is, according to the company, far better accessible compared to their main competition, which is Intuitive Surgical, the main Da Vinci robots. So they pretty much a designed product for a need, and they had a surgeon on a team, founder, very well known. Okay, maybe it's called, we'll call it academia, but they designed product from scratch. That's how they advertise it. But they were all experienced business people and so on, and they came from Cambridge ecosystem, which is well known for maybe for more from spin-offs, less for engineering companies. Maybe it's untypical, but I can see this being replicated with a younger team. When I say younger, of course, it's let's say more accessible, because you never. I think it's very difficult to get 6 founders who have who are in the 50s in the same time doing things like CMR Surgical done. Well, you can try to do it, but it's not really, I think, scalable. Yes, and just to finish off, I guess so Michael can contribute to earlier questions.
Finish your thought.
Yeah, and then this team executed, so design a product from scratch to the user needs with each of these ingredients have all the way, and the vision, and it's a rare example, but they didn't have any issues with capital. They went not typical fundraising rounds, so they went into, I think, straight Series A, 10 million, with wealth management mostly, not VC. VC really came the last round, I think 600 million round. It was the first VC that invested, except the corporate VC in the first round.
So thank you for bringing actually the keyword capital, because this is how we can also easily involve Michael now. Michael,
yeah, sorry for the technical issues. It was telling me that sort of in the middle of the conversation, it was saying that my browser didn't support the platform, which is interesting.
Actually wanted to ask you, maybe going a bit back to our definitions and the fundamentals of deep tech investing. What is the difference between investing, let's say, in a fintech or, I don't know, like an consumer startup, B2C startup, in comparison to, let's say, a deep tech startup? What you specialized on?
So I think a lot of tech now, sort of in, if you want to call it mainstream tech, whether it's sort of Europe's kind of historical holy trinity of venture-backed companies, of fintech, SaaS, and marketplaces. Sorry, my dog is barking. I think most of that's commoditized tech now. I think the issue now is that with deep tech, you have to understand that the technology in the beginning, there's going to be a much longer curve. Sorry, a bit of commotion going on in my apartment all of a sudden. There's quite a bit of sort of early stage technical risk that you don't have in commoditized tech that you get in other sectors, and so that's a big issue. I think the other thing, though, in IP-driven businesses is that you have a lot of the valuation early on is kind of sorry. There's a bunch of stuff. Apologies. I'm gonna have to like take a 2-minute break here. Sorry for this.
Okay, so Tomasz, maybe we continue, the two of us. You mentioned before that for the surgical startup, CMR Surgical, they had this challenge with the venture capital. And we will speak about it, but I actually wanted to ask you, besides funding, what are the top 3 risks or challenges that deep tech startups are facing today, and what are maybe also the most common reasons they fail?
Okay, so yeah, besides funding, so funding is one of my list, of course, already. So we already discussed this. Without order of significance, wrong product, business model, or both. And what does it mean wrong? It means there's either no need, it's not scalable, it's not good fit.
But that's also applicable for all sorts of startups, okay?
Yeah, but it's also, I would say this is one of the primary, and it might be why it's a risk which I mentioned, because it might take a bit longer to realize the risk unless you have the skill sets in the team and methodology and experience and the visionary as well, to know that what you're developing, and then for the investors, there is return on investment. And this is not to undermine really great deep tech startups in Europe worldwide. So I think this needs really support, and this is really a future, this investment segment. But the product and business model and getting a good mix, understanding of market, yeah, this is, and then it comes with the third reason, lack of key skill sets and experience in the exec team or across advisory boards at the correct stages. So these receipt stages I mentioned.
So I would say that it's more on the business development front and business thinking front.
And also the skill set of the technical team or science team, yeah.
Traditionally, the breeding ground for deep tech startups have always been academia. So I would guess that it would be useful also maybe to make a difference or to differentiate between a scientific breakthrough, as you mentioned it before, and innovation.
Right. So yeah, I'll try to tackle it. So of course, it's also like ambiguous. The definitions. What's the scientific breakthrough? Maybe easier was innovation. Innovation is a bit ambiguous. The way how I would define deep tech startups, scale-ups. So I have my own, let's say, I try to write down my own categories. And I would put 4 categories, actually 3, and third is combination of these 3. So I'll start with the science or fundamental-based breakthrough. And typically it is a biotech or an silicon-based startups, and this might be a new type of computing, sensing, and biotech, of course, is quite wide. You have pharmaceutical, you have agriculture, you have consumer, or new battery chemistry. So this will be, for me, the breakthrough. Scientific, but this is scientific or fundamental base. And then we have applied engineering products. So this is hardware related, but that means that they have a breakthrough on the integration level, for example, or the complexity. And examples might be, so mobile robotics is one of the good examples where we have both hardware and software components, but also even the hardware components, they might require quite a breakthroughs on integration level. For example, drives, how it's being built, manufactured. Then there are other innovative hardware-based products I will go into, and then we have automotive. We might have industrial sectors, right? Manufacturing. So this comes into this applied engineering product. And the last one is combination. Okay, and then we have AI, sorry. ML and data science, more SaaS based or infotech sometimes, which have significant amount of innovation in there, typically in AI, ML. And of course, I don't want to say that those are less important and so on. I would just not go into this because it's much widely talked, I think, what type of businesses, verticals you have in there.
I think it's not about the verticals, but it's more like what is the principle. So a scientific breakthrough is not commercialized, I would say, and an innovation already suggests that it is endeavor which is providing some kind of benefit to the market, to a society.
Yeah. So, okay, so coming back to your question, I would say for me it is difficult to categorize it breakthrough versus innovation. So I would rephrase the question into how you would categorize. So, but answering your question directly, okay, breakthrough versus innovation. Breakthrough is scientific or engineering-based, IP-based innovation product, service, and innovation is big bag of categories of products, deep tech and not deep tech, which tackle a problem with a combination of existing solutions, innovative way, right? But you can define it the other way around. Maybe innovation, you can do innovation on more lower levels, breakthrough as well, right?
Does the quality of a deep tech startup depend on the investments that we do in academia, let's say, and science?
That's a very good question.
Actually, when I was reading a report of from last year, I saw that governments are actually those who are I think, the investments of governments into deep tech, if you want to put it like realized deep tech, is as big as those made by VCs in Europe. Like a 12 billion market done approximately by governments. And on the other side, we have the venture capital, which is flowing into deep tech, is around, I think, 10 billion.
Right, yes. I mean, it would be great to have Michael here. Hopefully he joins as well. But I'll start off this discussion, a quick one. So I think there are so we have 2 or 3 aspects here I'll touch. So for context, so the academia, I think it influences the ecosystem and scale-ups in 2 distinctive or combined way. So one is when you have a direct IP transfer and the team transfer. So this will be, let's say, IP coming from academia. And this one. And second one is how we educate and future founders and then the founding teams and talent. So it is close enough to the commercial. Either it's scale-ups like startups or so they know how to apply their inventions. And those are 2 distinct, I would say, there are 2 distinct challenges in these 2, they are separated, let's say, the challenges. So definitely in spin-offs, the culture, the academics culture in Europe is not as mature in commercialization compared to like some markets like US. Definitely Michael might give examples. Europe, I think we are lagging behind. I guess for many reasons. I did have experience. We have great academic talent and great professors and leaders, but I'm not sure if the ecosystem in general is that mature of commercializations. Also the research institutes, the universities, not all of them or not most of them, they have a reasonable IP transfer programs which are feasible to investment markets and to real life of commercialization of technology. So this is one, but in terms of generating talent, to put it really greatly, and leaders who become founders, either a bit younger PhD graduates or maybe even professors, I think that's not that bad actually. So from this side, I think that's coming back to talent. We're generating really really great research and engineering talent. Also postgraduate, also PhDs, and then real researchers. Mindset of commercialization and commercial is not really rooted, I think, in academia that much as in, but in US, I think it's also perhaps, right? So you have Silicon Valley, you have Boston, and then few maybe. So it's also hub-based in US. I would not glorify maybe US too much. Of course, within these hubs, that's enough to bring maybe culture national. But yeah, and in Europe, of course, we do have some hubs, but even these hubs have challenges. There are success stories, like Zurich is really good at robotics, for example. You have, and there will be more, and there are more. Our region, I think specifically historically, I think is lagging a bit behind in terms of this, let's say the institutions, the academic institutions, and their rules and operational logistics around the IP transfer as well. This is definitely something in this region, in our region, to be improved. But this is, I won't say system thing, it is a bit, because it's governments in the end who can help, I guess, to, yeah.
Yeah, there are governments who are actually making the right steps. Would you say also some institutions which are somehow a breeding ground for deep tech from Central and Eastern Europe?
So institutions as...
academia, universities.
So I think this will be then, it's a bit more distributed. So you have a specific research groups who are quite good at specific universities. So obviously in Poland, so we have Warsaw University of Technology, we have Warsaw University, who has really great computer science department, who is also now coming into robotics. They have one scale-up called No Magic, who is really successful. It's not spin-off, but CTO is one of the professors. So it's other way around. It's more of an getting a talent, yeah. Maybe less of IP transfer.
So unfortunately, and I'm sure that you're very disappointed, Michael won't be joining us today anymore due to a family emergency. I ask you for your understanding. The panel was meant for an hour, but I would suggest that maybe we close it a bit earlier and enjoy lunch. I have a final question, and it's more maybe a dreamy one. A solution of which societal or environmental challenge that we face today would you like to see provided by a deep tech startup?
Absolutely. So I have three favorites.
Please.
Three, and then maybe we can go into one if you
tell us what you're bullish about. Yeah.
So medical or healthcare, medical/healthcare, agriculture, and energy.
These are the top three. And do you have like favorite startups in these that you're following fervently?
Yeah, so medical, this is CMR Surgical, and also Polish-based, CE-based called robotics rehabilitation startup called Exotech. They are taking a bit different route. They're taking a route of organic growth rather than typical VC funded, which is also interesting, but they're already quite successful. In agriculture, that's a tricky one. So I was very closely involved in this sector. So yeah, maybe we can skip this one.
Okay.
It's challenging. I would say there's a lot of opportunities there, and it's a bit too much hype, I think, in agriculture. But there are some selected startups that I'm not able to speak about. I'm really excited about.
Oh, okay.
Sorry for that. Energy, I would love to get involved more into energy, especially I think in robotics you have some interesting solutions like harvesting and energy using an actually drone, which is tethered. There's one startup based, I think, in Netherlands, which is or Belgium doing that. I forgot the name. So, but there's definitely more system solutions to not robotics related only to energy. Especially in new innovative ways, so source sustainable sources and also kind of grid management. Yeah.
Thank you. Again, I'm sorry we couldn't bring the investment perspective to the whole thing. I think it would have been super interesting. I'm sure that we'll have the next opportunity to catch up with Michael at a better time. Thank you, and thank you also, Tomasz, for joining us today.
Thank you. Thank you for hosting us. Yeah.
Thank you very much. So after a very deep dive, I think some of us really need to catch our breath. And by saying that, I would like to invite you just to have a quick lunch break. And we are going to see you back at 1:30. So hopefully you guys would have some time to, charge your batteries and your phone's batteries, just to make sure that you're going to be on the, matchmaking platforms. And see you back there with a very interesting opening. So just try to make sure that you would be here on time. So thank you very much, guys.
Greetings from the Wrocław Congress Centre, where we are hosting Wolf Summit 2022 this May. Needless to say, our thoughts and prayers are with the Ukrainian people during this terrible time. Especially close to our hearts at Wolf Summit are the Ukrainian founders who are continuing to pursue their dreams at this time. Sadly, the ramifications of this war are being felt worldwide, although most acutely within the Central and Eastern European region. In light of this, I've made the decision to invite all startup founders from the following countries to join us here in Wrocław this May, completely free of charge:
Bosnia and Herzegovina,
Latvia,
Poland, Albania,
Romania,
Czech Republic, Croatia,
Lithuania, Kosovo,
Hungary,
Bulgaria,
Slovakia,
North Macedonia,
Slovenia,
Serbia,
Estonia, Montenegro,
and Ukraine.
I'd now like to sincerely thank the city of Wrocław for providing us with this amazing venue and for their continued support in making Wolf Summit 2022 truly iconic. See you in May.
Wolf Summit 2022!
So guys, if you really had a hard time because you had to eat too much food downstairs for the lunch, or maybe because you had too many meetings, or I don't know, maybe because the chair is too comfortable and you just don't know exactly if that's going to make you fall asleep, you know that you have a lot of first world problem. And this time we're going to talk about shifting the focus from the first world problems to global problems. And if you're one of those people that right now you see whatever is happening around the world, you basically understand that right now this might be one of the most important things that you really need to know. And we have a perfect person in order to discuss all these things in detail. David, I'm sure that you have a very interesting, but rather, let's just say, concise and short time, so I'm not going to take more of your time. So I would like to welcome you on the stage, and we're looking forward to hearing more about you.
Okay, perfect. We will have the presentation as well? Yeah, perfect. All right. Welcome, everybody. Here, a few guys, if I'm not mistaken, it's from, as I see in the lamps, and also online. So try to start now and begin with this short presentation we prepared. The basic idea about today's presentation is trying to give you a short glimpse about what's happening right now in terms of in the minds of a VC, and also what do we expect as an investor on the market. Just to give you a short hint what's going on right now, it's basically just the focus of the global startup scene and the industries where they are active. You can see that currently the most of these companies work on such areas as fintech, as AI, as assistant healthcare, which are, of course, it's my phone, sorry. No, it won't disturb us anywhere, sorry. So what I was gonna show you here, that these industries at the top consist of mainly industries which solving the problem of higher capita and first world problems. So basically, as you can see, if you go down a little bit, and then you see maybe at the bottom AgTech and also clean tech, maybe that part which we think would change in terms of number of startups. So what you see at the top is really those areas which are hot right now. And just to talk about a little bit, of course, about ourselves, you can see that our portfolio reflects pretty much the same as the industry itself. So our companies, which are basically scale-ups and going for maybe Series A, Series B right now. So those are companies with a couple of million euros revenue per year. These are the areas where we are active, and we can say that maybe in Europe, and especially in Central Europe, these areas are the typical VC areas of a fund which is not specialized in a certain field. And these are also some examples, like these are the companies which are actually doing probably they are doing their best. It's companies which are really solving these kind of problems, like e-commerce in the middle, or a blockchain technology down there, which solving problems of kind of like a fintech area. And also Comsignia, which is it's a growing company. They over $5 million revenue for last year, and they are doing such infrastructure, vehicle-to-vehicle and vehicle-to-infrastructure solution to make life in cities and in transportation safer and easier. So these are, I think, those areas where you can say this is not, a typical problem of African country or at least or a smaller GDP per capita country. It's really the problems of this kind of developed countries, let's say. So that's what also, of course, that's what we did so far. And what we see here, and this is also related to the problems of today and what's going on in the world. Of course, it's on one side, which is a longer perspective, is the environmental side. Like you can see that food supplies and anything connected to this supply chain is having huge problems and will have even bigger in the near future, according to our understanding and most of the experts. Also, the pandemic situation revealed a lot of how to say weakness of the current economy, even supply chains outside of food supplies, and also if you just unfortunately don't have to look too far to see the situation in for example, in Ukraine. You can see that it will have much broader effects probably for the economy in the short and middle term. So these challenges will be there and will force probably a lot of stakeholders to think about investments and this area a little bit differently. So that's why we're seeing that in this sense, health tech, clean tech, like obviously there is an urge to try to get the fossils and all these energy sources we use right now to get it a little bit back in terms of the reliance on them. All these problems will now, even if for the current situation, will speed up. So that's why we're seeing that this is one area where VCs and the world has to progress. So that's just a quick glimpse, like what we are doing currently. You can see that we do early stage, growth stage, and acquisition targets. This is more like our current way of thinking, but at the end you see that we are currently fundraising and trying to put together a green fund, which is of course focusing on these kind of problems like clean tech and agri-tech problems. And yeah, that's why we are thinking of ourselves as well as an open-ended fund. We listed our portfolio on the stock exchange in Budapest as a first step, and we try to be innovative in this sense as well, and that's why, as I mentioned, that's the reason why we are thinking about the green fund as a new way of investing in these important areas come in the next few years in the world around us. So thank you very much. Obviously, I don't see my phone where I started to count the time. It was only good for ringing, but I hope I didn't go above the 10 minutes. So thank you very much. And if you have any question, please feel free to ask. So, thank you.
Thank you very much. There's nothing better than a speaker who finishes on time. So guys, now that we understand what are the problems that is for the first world and what are the problems that are more global, now maybe it's, let's just say, I'm not sure how much I can make joke, but let's just say that I would like to bring a doctor just to educate us. So we're going to talk about 10 learnings from 10 investments in Poland. I am very much excited to have Marcus on stage because as much as he is very good practically, he is also a very good person when it comes to, let's just say, understanding the underlying things and the theories behind it. So we cannot have a better person to try to talk about the investment in Poland. So with that, I would like to welcome Marcus, the founding partner at Sunfish Partners, just to be on stage. And hopefully we would learn all of these lessons from him. Can you just please welcome with a round of applause? Thank you.
Thank you. Hi, everyone. I'm very happy to be here. Trust issues are omnipresent. The US VCs have not arrived yet, and we love it here. Are only 3 of the 10 learnings I want to elaborate on with you guys now. We've been looking at this market since 2017, and we've been investing out of our fund at Sunfish Partners since 2019. One of the founding partners there, and it's been a very educational time for us. It's been an inspiring time for us, and it's been a fun time for us, and I'd like to share some of that with you guys now. Sunfish Partners is an early stage VC that invests in Polish deep tech startups with global ambitions. We're normally first money in, first 250 to 500K euro for the teams, and whatever is best for the team. Sometimes we co-invest with angels, sometimes we co-invest with other VCs, but we're not afraid to be the only one to be backing teams early. Number 1, trust issues are omnipresent. In most startup ecosystems, trust is the default. In Poland, in our opinion, it's not. So like there's a high level of mistrust among all the different parties, investors, founders, lawyers, and we've seen many situations where really a lot of time is spent on trying to think of hypothetical edge cases that might happen sometime in the future. And I mean, A, I think this is frustrating, and B, this is really not efficient, right? Because nothing is more precious than founder time. And while it might feel smart intellectually to be thinking of the weirdest edge cases that will probably never happen, and this is just not efficient to get deals done, right? I do understand that there might be historical reasons why trust is at a generally lower level or that corruption is higher here, but at least from all the founders I've interacted with, or most of them and most of the VCs and lawyers and so forth, I think at the early stage investing level, the ethical standards are just as high as everywhere. And I think the whole ecosystem can really benefit from trusting a little more and getting things done at that stage. Unique unicorns are in the making, right? So Poland has its first unicorns, and I don't want to take away from that. That is impressive. Big congrats goes out to the founders of these companies, the employees, the VCs who all have made that happen. However, I'm personally not too excited about these companies because that's unicorn 1.0, right? Sort of like it's the eBay of Poland, right? Sort of like the XYZ of Poland. Whereas I think now we're at a stage where we're soon going to see the first unique unicorns, right? A company that by itself is not just a copycat version of something else where that company is a unicorn in 10 geographies at the same time, and Poland happens to be one of them, but the first standout company. And we first, I mean, I think we already have the first unique slottycorns, right? So million slotties in terms of valuation. And if nothing goes wrong, I'm very confident that this year or latest next year, we're going to have the first unique unicorns here in Poland as well. And that will give the market a very big uplift, right? I mean, think UiPath in Romania, which is a unique unicorn in my opinion. And then all of a sudden that puts us on a map in a different way. ESOPs are tricky, but a must. I mean, one of my favorite quotes is, show me the incentives and I show you the outcome, with Charlie Munger, and that really is so true. I believe that in a startup, every critical employee, actually every employee should have skin in the game by having shares, right? And an employee stock option plan be it in actual or in virtual form, is the way to get this to work. Legally, this can be challenging and it's tricky because, I mean, not just in Poland, everywhere in the world, because financial authorities never give you final answers. So it's hard to figure this out, but it's important to get this right. And I mean, what we're doing, we're sharing, we're connecting our founders in the portfolio to figure this out together. I mean, we're not there yet, but once we have a blueprint that should work 90%, we're going to open source this so the whole market can use this and learn from this. I think just as important as getting this right on the legal side of things is actually communicating this. Because while you would assume that every employee really wants to get equity in that company, in particular when it comes to tech hires, that needs a lot of convincing and salesmanship of the founders to really get everybody excited a bit about this and have people understand the true value of having equity in a company. Software houses are a blessing and a curse. I mean, there's a lot of software houses in Poland. I mean, per capita, way more software houses here than in Germany, for instance. And I think overall, I mean, this is an essential part of this ecosystem. It's one of the unique things. But depending on whose point of view you take, I think there's pros and cons with these software houses, right? It's not black or white. It's colorful. And to just give you a couple examples, from the founder's point of view, yes, in times of hypergrowth, it's great if you're running out of your own resources to have someone on hire and have a software house that you can leverage the people, the skills, and so forth. At the same time, let's be honest, sort of like you're competing for some technical roles with these software houses for employers, right? And normally you as the startup are not the one who can compete on stability, on salary, on reputation. So sort of like it's a tricky relationship. Similarly for us as VCs, right? There's quite a few software houses who pitch to us every month saying, okay, we're a software house now, but agency business is not the thing we want to keep doing. We want to twist this. We want to become a high growth startup. And if this works out, and it sometimes does, I mean, we haven't announced this yet, but we recently made an investment in one such case, then it can be very powerful because obviously the founders have a lot of managerial expertise. They've built an organization, led a team. On the other hand, it's sometimes tricky for us to figure out if that is really what the software house is doing or if they just want to leverage our money to be running a side project and trying this out, or in some cases there are software houses pitching to a number of different VCs, different side projects they want to be doing. So we really have to check for commitment and also sort of like the mindset, right? It's a fundamentally different thing. It's not better or worse, it's just fundamentally different if you're running a stable agency business or if you want to do the high risk, high growth potential startup track. EU grants can be useful, but used wisely. A lot of opportunity for EU grants, and obviously it might be an interesting component to add to the fundraising mix of a startup. Can be equity free in some cases. I think pretty much all programs are well-intentioned. How they're designed in the end differs vastly. So I think it's very important to look at the details there to get an understanding, because some can be of tremendous help, and we've had teams in our portfolio leverage some of them, actively decide for them. Others not so much, because some of these programs can be bureaucratic nightmares. They can have really weird strings attached, and even if they work out for a startup now, they might make it much less likely or almost impossible for top VCs that invest on international standards in the coming rounds to enter the company. So you really want to be thinking about this. A whole industry has popped up of grant consultants, and there I think it's also a matter of experience, because some of these people are really worth their money and they're great at helping the teams. A lot of them are mediocre or bad and not worth their money. So it's also very important to filter properly and get reference checks from other startups who've worked with them. Everybody loves to bargain in Poland, and a bargain Krakow style, a word I learned here, dates back to the 17th century when merchants in an old market square in Krakow were bargaining happily and haggling like crazy, and one person would make an offer that's way off and the other person would counter with an offer that's way off, and this would go on for a while, and in the end you somewhere meet in the middle ground, right? Obviously that's a super inefficient process, Because had both parties started with a more reasonable first offer, they would have ended up on the same middle ground, right? I think there's a bunch of explanations for this. I think one, quite frankly, I do think Polish people enjoy negotiating to a certain degree, more than I personally do enjoy it. On the other hand, I do think that this changes over time, or I hope it's going to change over time. Because again, like founder time is so precious, right? So you don't want to be spending it on negotiating, in particular if the end goal is going to be the same thing, right? The tricky part about this, it's hard to change this, right? Because even if I have the intention of making a reasonable first offer, unless the other party knows that's what I'm doing, it's a prisoner's dilemma, right? If I do that, they're just going to assume, okay, now this reasonable offer, oh, that's actually the crappy offer, right? So it almost forces people who want to make reasonable offers to give themselves extra wiggle room, right? So it's tough for us. Sometimes we have to think, okay, this is what we want to do. We know this is what we're going to end up with. But if I say this now, founders not going to believe us that this is a reasonable offer. So we have to start somewhere else to, in the end up at the same spot in the middle. The one thing that gives me hope, obviously, is like the more frequently you interact with the same parties, right? There's lawyers who've been on our side, on the other side, back and forth many times. So people know you, plus it gets a lot easier in follow-on rounds, because obviously you have a much stronger relationship with the startup, and they know how serious you are about things. Number 7, the ecosystem is changing rapidly. I think that's the obvious one. I don't have to explain this to anyone. It's just fascinating to see how dynamic it is, how many new faces there are every time, how many new funds are coming up. The things I'm most excited about, that international standards are coming through, and more startups are smartening up on them, and investors as well, and really try to see what works elsewhere and what can also work in Poland. Obviously, every ecosystem is unique and has its unique strengths and weaknesses, but a lot of best practice in venture really can be implemented. I think it's also a key learning from the industry. I think 5 years ago, also like the law firm had much more of PE goggles on from their experience and their background, which can be quite different from doing very early stage deals like we do. I think there's been a huge learning curve there too. Yeah, and I can only encourage this. More money on the market as well, right? Some people might even say, okay, isn't there too much money at the early stage? I don't think we're nearly there yet, because at least from my experience, we're not at the point where every talented founder in Poland has a number of great VCs to choose from. And I don't think we're there yet. And so long way to go, but overall I'm very happy how it's maturing here. The top US VCs have not yet arrived. Ever since we touched ground in Poland 5 years ago, people have been saying top US VCs are right around the corner. Well, they still are. 5 years later, what do I mean by that? I mean, I have not, or I've yet to see a seed round in Poland or a pre-seed round where Andreessen Horowitz and Sequoia are both pitching and only one can get in, right? Eventually this will happen, but that's a couple of years out. I also think we probably have a 2-year delay now. I think we were getting closer to this before COVID hits, right? But COVID and first investment in Poland, that's maybe would have been too much uncertainty for the top US VCs, right? Could have said, okay, I'm happy to do my first seed investment in Poland, and I can also do investments over the Zoom, but so like combining those two, first time ever in Poland, and then not even seeing the team or the angels and so forth that are investing it, probably a little bit too much. But this, I think, is a matter of time, because you see how the top US VCs are setting up additional shops in London and Berlin, in Paris. We also get contacted much more frequently now with people who just want to like educate themselves about the Polish opportunities and the ecosystem. So obviously they're going to be here eventually. So let's hope they're a little closer to the end of that corner. The risk-reward profile is very attractive. I mean, it's the reason we're here, right? Yes, it's super risky here. Yes, it's a lot of work to do a great job. Yes, as always in venture, luck is a big component. Timing is a big component. However, the rewards for being here early, I think like are much, much bigger than that. So this is one of the best risk-reward profiles I think there is in the world right now. And Poland is at that interesting sweet spot, right? I do think there's enough infrastructure that we're ready, and we now have the first unique Zlotycorns, and hopefully soon we're going to have the first unique unicorns in Poland, right? There's enough capital, infrastructure, best practices. At the same time, it's not obvious how good Poland is yet. There aren't too many great players from abroad here fishing in this pool. So this is not like the Berlin ecosystem with all its pros and cons, where in the end a number of VCs are pitching for every single good deal to get in. And 50% of the job of a VC is doing marketing, and that also drives up round prices, which sometimes might be justified, but sometimes might not be justified. And in the end, obviously, higher pricing on everything is gonna influence the reward expectations as well. And I think we're at a nice sweet spot here where valuations, they're not too high, they're not too low, they're fair. I mean, there's exceptions everywhere, but I think they're fair, and this is an attractive risk profile. And number 10, we love it here. It's been great seeing how this ecosystem has evolved over the last 5 years. It's been a true privilege to have spent so much time and to learn so much from the great founders in this ecosystem. So we're definitely not going anywhere. We're happy to be doubling down on Poland and beyond with future funds. And we're really happy that we get to be part of this ecosystem. I'm going to leave my email right here, and I'm also going to be here all day, so feel free to reach out to me and let's chat if we can work together in any way. And just as the last slide, I'm going to put a summary up there of all the points. I've also posted them on our Twitter and our LinkedIn in case you want that recap. And yeah, and that leaves me to say thank you for your time and wish you a great conference.
I mean, what's not to love about it? So, you know what was the most interesting part of that? That's what every startup should do, right? So you have bullet points, you know exactly why you're on the stage, you tell the audience that why you're trying to talk to them, you have a summary in the end, you have a way to contact them. No offense, but I really wish I would see more VCs talk like that, and I loved it. And I would say that things are only going to get better. All we need to do is just a small 1 minute just to prepare the place here, and hopefully then you're just going to learn a lot about fintech. So just give us a quick time, and then I will just introduce the next panel here. CEE. I would say a lot of us are very easy just to spot challenges, but try to come over and then try to tackle it is a whole different story. One thing that I see by myself and experience that I see in this part of the world is there are people that they talk less and they do more. And I really feel that the next panel is mainly consists of those people. Some of them that, let's just say, although that on the surface they're conventional, old school companies, they are really doing innovation and they're really try to, let's just say, tackle those challenges. And I'm not going to take more time. I'm just going to invite Alexandru, the CEO of RockSAX, to be on stage. And hopefully he will take it from here and introduce the rest of the panel. So Alexandru, the stage is yours.
Hi everybody. Can you hear me? So happy to be here, and I'm going to be joined here on the stage by Konrad, which is an innovation expert at PKO Bank Polska, by Richard Ice, Oxo Holdings, investment director, and also by Patricia, which is founder at Cash Director. So we're going to debate about the fintech market here. So I'm Alexandru Bogdan, I'm the CEO of RockSAX. RockSAX is a venture capital in Romania. We are active across the entire Europe, and obviously we did some fintech investments. So this is why I'm here. But I also love to see what are the new trends and how do you feel in the various corners of the market that the fintech is evolving. So I will invite you, each of you, to make a short presentation of yourself and tell us which are the trends that you foresee now.
In a bank. Okay, so my name is Konrad Ozdowy. I'm the innovation expert in PKO Bank Polski. So I'm responsible in cooperation with startups. So we made some partnership. We implementing the startup to our bank to be more innovative, to to understand the trends. So we are very open for the trends from the from the startup ecosystems, because it's more disruptive and they see it's easier for the small companies to to implement some new technology, and for us it's better way for implementing this new technology to our bank through these startups. Yes, so this is about that, and about the trends. So main trends, I think, right now in the banks. I mean, it's the the beyond banking, yeah, I mean the added services that banks are trying to us right now, not to be only as a bank, but to give for their clients more services than only the possible to make some transfers and other things. So it's in a nutshell.
Okay, thank you. Patricia?
Hi, I'm Patricia Strzelska. I'm the co-founder and CCO, Chief Commercial Officer at Cash Director, a Polish scale-up in the fintech sector. Cash Director offers a solution for SMEs and for banks for automating daily finance for SMEs and automating also accounting and automating the cash flow management. This solution is integrated with online banking, so helps through the online banking helps banks and SMEs work together.
Hi everyone, my name is Richard from Oxo Ventures. We are based on Hungary, and now we have an open-ended fund with a portfolio with 20 startup companies. Personally, I have 2 portfolio companies, which is fintech companies, so that's why I'm sitting here. But now we are still raising. We would like to raise some sector-specific fund. The first fund could be a green tech fund, but our second sector-specific closed-end fund could be a fintech fund. And what can I see in the trends in the future or in the past? Maybe I can start with the past. So as far as I can see, the past 2 years was a super intensive year in fintech because of the pandemic and because of the regulation as well. And there were a lot of acquisitions, mergers, and even if IPOs in the fintech area. And I hope, I assume that in the future it will continue. Maybe one thing that I'm missing a bit, in the past there were a lot of neobank in fintech area, and as far as I know, just few of them went public. And because we are a publicly listed company in Hungary, we truly believe the transparency of the public market. So I a bit missing about the IPOs, the huge number of IPOs, the neobanks.
Maybe I will add about the trends, yes, because I missed this. So I would say from two angles. When we look at the trends in, what VCs are investing in terms of the fintech sector, we see a trend that investment goes to cryptocurrency, blockchain, also neobanks. So these are very, very large investments. But in terms of really the fintech and the banking industry, I fully agree with Konrad. Beyond banking is now the trend. Banks are looking for value-added services. I'm happy to comment on this a bit more in detail, but I'm very happy that Cash Director fully participates in this trend. Having now 5 banks signed, having now over 150 users on our platform. So we are fully in the trend.
So great, and I hope that this challenge that we already have, because it's a late panel, will give us an opportunity actually to attract more audience, and not only the specialists in fintech. Maybe we can go a bit deeper in what beyond banking means, also for the newbies in the sector. So maybe you should start from the perspective of the startup and scale up that is bringing new stuff on the market.
Okay, so beyond banking is means that banks are adding services or products and services that are embedded within the banking system or banking ecosystem to increase value to their customers, both retail and business customers. Why this trend is so significant now? Clients are really looking for a good experience within the bank, and clients are looking for, let's say, a one-stop shop place where they can find not only strictly traditional banking products, but let's say complementary solutions that basically help them either in their daily life, if these are consumers, or manage their daily business, like in case of Cash Director. So we are talking about really many solutions on the Polish market, such as topping up the SIM card, paying for the parking ticket, also embedded insurance and many other services, buying cash registers for small businesses. So when we look at the trends in the last years, we've seen that, of course, the banking industry has been changing and evolving, and many strong fintech companies appeared on the market. Some of them started to carve out some of the very profitable revenue from the banks. So now the reaction is on the side of the banks, really to enrich the offering, to keep the clients, to increase their loyalty, and also to acquire more new business from the market. Let me just share the example from Cash Director. When we have done in 2016, so it's already 6 years ago, we've done the first integration of an online accounting and invoicing software with online banking. It was the first integration in Europe. We've done this with mBank, a fantastic partner to work with. And since then, the bank has reported, I'm not disclosing any information because that was announced by the bank. The bank was able to increase the SME client acquisition by 20%. Why? Because through including our platform and the services we offered, the bank ensured a really unique experience for the micro companies that were able, while logging to the online banking, were able to do everything from issuing invoices, getting paid, making payments, following their cash flow, even doing the full accounting, end-to-end accounting, including tax filing. So this was, for the bank, an opportunity to differentiate, to make a lot of, let's say, to differentiate from the other banks, to acquire new clients, but also to increase loyalty. Because once you have a client who uses a set of services within the online banking, within the ecosystem created by the bank, then the client is staying with you and is increasing, the number of, let's say, a variety and number of transactions. So the client is becoming a premium client for the bank. And the client is actually choosing this bank that offers the broadest and more comprehensive services as their primary bank, yes? And having a primary bank relationship, I mean, this is a dream for every player on the market, isn't it?
Yeah, just a short intervention. So you're saying that the customers are demanding more services to be brought to their advantage. But my question to you would be, isn't it the need of the bank to reinvent itself and provide more value added and not commoditize the banking services that drives this beyond banking trend?
Of course, that's true. But it's hard to. Okay, so let's say from this beyond banking, that's exactly true what you said, Patricia. Go very deep in this subject. What I would like to add to this, it's not what we see right now. The trends in Asian banks, that it's not only not that the value-added services are the beginning. Right now, the big trend is to making from the bank apps the mega app. And we see that these apps are for they are connecting some social media communicators. They're connecting even the marketplace, so you can you can enter every part of your life every day doing you can do through one app. And of course, every app producer, or maybe owner, not producer, owner want to be their app will be this mega one app. Yeah, of course, banks want into their app will be. But answering to your questions, of course, bank, it has to be said that that banks slept the digital revolution of the financial ecosystem, and right now, and because of that, there was and there is still a big boom for fintechs. Yeah, so because they slept the digital revolution, but about the services, but also about the offer for the clients. Yeah, so the clients need some different services, and it's and the fintechs are offering them better. But now we see that most banks are change their direction, and they see that they have to go with the trends, yes, and they are and then they are switching, so they're they're sometimes even reinvent a bank. So sometimes, for example, there are they are doing sub banks for the special group of people. For example, there is some Spanish bank to make some sub banks simply for the Gen Z with different communication, because it's hard to reinvent the bank as it is, but they can do other banks, I mean sub banks, to to be more like fintechs. Yeah.
Okay, thank you very much. I was wondering whether, because you're telling us the story about 6 years ago already reinventing some of the services and how you have contributed to this, how easy is for a scale-up in this region of Europe to grow and to ride this trend of beyond banking?
Actually, your question has two components, because it's, as I hear it, it's about how easy or how difficult it is to raise money, and how difficult and easy it is to work with banks. And these are two parallel stories. So let me start with the investments. We had a huge peak worldwide in terms of the value of investment in the fintech industry last year, 2021. However, let's not be misled. These investments went mostly to well-established and well-known brands. Most of this, I mean, a very important part of this investment, over $200 billion, went to large tickets. So that's first. Second, in terms of specific sector or subsector, the large investments went to cryptocurrency and blockchain companies. and second were investments in neobanks such as Revolut. So these are very specific targets for the investors. And only after comes digital payments and digital lending, only after that. Also, when we look so just starting with the global picture, then CEE, only 5% of the European investments went to Central and Eastern Europe, only 5%. And from this 5%, in Poland, 25% went to healthcare sector and only 9% to the fintech sector. So when you decomposed, then you come up with a, let's say much modest, more modest, let's say, figure and situation in Poland. So it is not easy to raise funding. Being a startup from Poland or scale up, Cash Director is a scale up, and we are already after round A, so we are doing quite well. But my experience is that it's quite easy to get seed money, angel money, seed money. There are a lot of seed funds in Poland. They are backed by PFR, and luckily we have PFR, luckily, because thanks to PFR also international VCs started to invest in Poland in cooperation with or using some PFR money. So in terms of seed, that's fine. However, after the seed investment, it is difficult to raise round A and round B. Because there are very few, let's say, larger funds in Poland, and larger, it's really medium in compared to the US funds, of course. And Markus said that, the US funds did not enter the market yet, so in Poland. So we are dealing with local funds. Local funds are risk averse. If you really want to grow internationally the business, you need, or we need to not only not only expand to the European markets, but also to the US markets, yes. And to go to the US, you need to have very brave and, brave investors ready to take some risks, of course, because it's difficult to succeed on the US market, but the returns are huge and the market is huge, and, it's super, there is a huge potential, of course. Now, just to finish on that, while wanting to expand overseas, it's important to be able to be backed by a US investor. And a US investor will look at us as a scale-up only when we are at least above 5 million annual recurring revenue. And they would like to see already some operations in the US, already the first client in the US, already the first revenue in the US. So now, in order to, let's say, reach this minimum demands of a US fund, we need more money from Europe to support this jump over the ocean. And I will answer about the banks later.
Okay, thank you very much. If I may add here before giving the mic to you. I just recently read a very important news about this part of financing later stage startups in general, not necessarily in fintech, because the European Union is committed to compensate this lack of capital for later stage. And I think that it is a decision of the European Union to invest like 30 billion in the funds of funds that will be dedicated fully to B, C, D series, where definitely it's a gap, immense gap, and not all the business models are necessarily applicable in the US. So we all dream about US market. We want to passport our companies there, but not necessarily everything is applicable, and we should have some also European unicorns, ideally, that are for European people. So coming back to you, how is this battle between the adoption of new technologies and trends inside the big bank, which also has some challenges in terms of getting rid of the legacy system, the legacy procedures, the restriction in the legislation? How do you feel this inside the bank?
So that's why, because of the legal issues and some security issues and regulation issues, so that's why the banks are cooperating with like fintech startups, yeah, or like other insurtech startups. So because sometimes it's, for example, it's or they are doing sub-banks, yeah, but it's more complicated. Or sometimes, for example, for some, let's say, new services, banks cannot do through the, like a legal service today, like a corporation, but simply, like a giving the money to the, like a startups, the fintechs, to the things that are doing some software for the, some better factoring, better or faster, or like a more prepared to the digital world, like services like factoring, like escrow, like other, like other, classic banking services, but digital world needs also the services, but more digitalized, which is like a more complicated for banks. So I see, like one option is that we as a bank, we are cooperating to start implementing their services. Second thing, we are simply like giving them money to operate. Yeah, so like lending to startups, cheaper money, like the cheaper option. And also sometimes, if it's possible, we are buying the startup. Yeah, but think again what I said before, that due to that, because of banks, like are late in this digitalization of financial services, some banks finally, like I was, not only banks are buying start by fintechs, but some banks was bought by fintechs because of the, like the unfortunately.
The lucky ones which grew enough to buy banks in the end. So maybe about the number of such events, and we would love to see not necessarily more startups buying banks, but more startups growing big. As an investor, we've seen, and to give a bit of a feedback on that experience, we've seen that sometimes because of these regulations, because of the interaction with the banks and the slow movement, so because I think it's a difference when you discuss with a neobank compared to a classical bank, the growth rate of these fintech startups has been slower. And that's why sometimes when you want to move fast and grow to that exponential adoption, we tend to go to other areas, but we definitely believe that in medium and long term, we should do some solid investments in domains which need some revolution. And I would be curious, before going to Richard, because we're not, how do you feel as a startup this cycle of adoption from the beginning, where you have the contact with the bank and the first time they give you the feedback, it's a great idea, we should have it, until they really start to communicate to their customers?
Yeah, a painful question, but good one. So, of course, I mean, don't expect that I will answer that it's all easy, because it is not. But we understand, and fintech understands, that banks are huge organizations with long decision-making process, and we know this. We understand this. That's not something that's not surprising. So from my experience, we were able, let's say the project that we implemented, really the fastest was actually 1 month to implement cooperation with a fintech bank, yes, and a kind of neo-niche bank, because the bank was also, or is also, a fintech. So they move fast, they have short, let's say, decision cycles, and they know that if they want to survive, they need to act fast. However, in terms of cooperating with large banks, and we have some agreements with large banks, it goes until 12 months, yes, from the moment we start the discussions. And yes, we need to live with this, because we also, I mean, it's very important that fintech understands, or representative of fintechs understand, how the decisions are being made within the very large regulated organizations such as banks. But it's very important, and I always, hope that banks understand that for fintechs, a very, very long decision-making process can mean that at the end there will be nobody to speak to, because the startup will go bankrupt, yes? Luckily, as I mentioned, we are happy because as Cash Director, we are backed with EC, Magenta, with Luma Ventures. We are already, we actually were cash positive for the last couple of months. So we we already passed this period that we are struggling, yes, but still we experience this long decision-making process. However, I'd like to maybe touch upon the fact that I deeply believe, and I hope banks share this view, I deeply believe that there is a big opportunity and a big benefit, like important benefit for the banks to work with fintech companies. Because this allows banks to implement innovative solutions much faster and much cheaper. Really, some banks have this tendency of saying, okay, this is a cool solution, it's really cool, let's do it. We will do it within our, within the bank, why not? But then...
Give us exclusivity.
Yes, give exclusivity, or let's do it ourselves. Yes, but then of course everybody. I mean, the development of a similar solution within the bank takes longer because of the fact these are regulated organizations, and each process needs a longer process of approval. Also, the cost of developing within the bank is much higher. I mean, really. People in startups work for lower salaries than people in large banks, yes? And plus we are backed with VC monies. So I hope banks understand this and see this value, that it's really to have a quick win and faster go to market with a certain idea and solution. It's really beneficial to work with fintechs.
Thank you very much. So we should take a lesson learned out of that. Really calculate smartly the duration and the sales cycle before you plan, and also you plan to raise a round, because it's great to hit your targets and not to disappoint in order to keep the growth, even if it's steady, but to keep it. So we're coming right now after 2021, in which we had the biggest investments in fintech. We had the PSD2 giving some results in terms of adoption. What areas do you think are not covered, or how do you think fintech could reinvent and do more for the entire industry? Richard?
Yeah, so we talked about the relationship with fintech and banks, and the fintech, as far as I can see, the fintech is a huge cake, and just one slice is the banking technology. And as Konrad mentioned before, for example, online factoring and insurance tech, and we have regulation tech, which is maybe most important in these years. So as I can see the future in this part, of course we have a huge growth in banking technology for the future, but we as an investor take care about insurtech and regulation tech companies as well. So regarding the regulation, as you mentioned, in the banking technology for PSD2, so the European regulators implemented PSD2, but they didn't or haven't taken care about the regulation of insurtech companies. So I think there is a potential to startups, but they can wait for the first step from the regulator.
Okay, we touched briefly upon the cryptocurrency and decentralized finance, and definitely the volatility and the huge gains attracted a lot of attention, and a lot of the money are funneled there. How do you perceive this trend, and where do you think it will go?
So my perspective is, so the cryptocurrency is a buzzword now. I think maybe it's too risky for us to invest into from this region into the cryptocurrency world. A lot of US and UK investors do this and maybe take a huge gain about it. But for us, it's too risky. So cryptocurrency now is a buzzword, but I'm not sure what will be the end of this area. But the other thing you mentioned, the decentralized finance, yeah, I truly believe the blockchain technology, and a lot of startups use the blockchain technology now, not just for cryptocurrencies, but in other areas of usage of this technology. So, for example, we have a startup in our portfolio who helped the banks to do the compliance process, and the system built on blockchain technology, which is a really safe technology. and the closed technology. So yeah, it's pretty good, and there is a huge potential of the technology, not the cryptocurrencies, I guess.
Yeah, indeed. Very often when we hear blockchain, we always think about crypto. But there are so many other ways to apply blockchain. We have actually a startup which provides a solution for distributing IP rights in the movie industry. So it's very simple and just one click. I think we should find more and more applications of that, but are very rare in this region. So I was curious whether you are considering extending yourself into this decentralized finance as a provider, or finding new ways of monetizing the blockchain technology apart crypto, which is definitely your competitor in terms of financing.
Maybe in the future, yes. It's not something we are working right now, but we've been asked this question several times, and we are not saying no, yes. But however, our technology is now based on automated. It's a AI-based automated system for booking and managing, reconciling transactions between invoice documents and bank payments. So that's what we focus on right now.
Okay. So now the banking view over these decentralized finance and cryptocurrency. How do you feel considering the attitude of regulators, which differs a lot from one country to another, how do you plan on to navigate in these new waters and opportunities that I think are arising from this?
So starting from the cryptocurrencies, so like for now, like Richard said, it's for banks. It's also a little bit too risky to to enter fully to the cryptocurrency market. But what banks starting to do with cryptocurrencies is adding as a VACs, as value added services, possibility to buy cryptocurrencies through their app. But usually it's not like you are buying these cryptocurrencies, but it's you're buying ETFs of these cryptocurrencies, but it's happening right now. So this is the I think first official touch of the regular cryptocurrencies. But talking about blockchain, so this is in this area. Of course, we are totally in our bank in PKO. You have the special department doing blockchain. We have the blockchain sandbox for the blockchain startups. We have like a lot of maybe it's not a good word, but we have some implementation of Polish and international startups, like helping us challenging some, like the document issues. So because of that, we have, like millions less of documents, printing. So it's like it's first of all it's ecological, but second of all it's like it's also for the less money we spend for the like for printing documents simply. So yes, so blockchain. Yes, we are doing it. We are trying to, like to be the most common bank in blockchain technology. So we are trying to implement blockchain wherever it's possible. Now, in the case of cryptocurrency, like it's without regulation, we cannot do anything more. But talking about this subject, also we can say it's like few words about metaverse. Yeah, so it's also connected to the subject. Yeah, so this is what I see right now. So this very interesting subject for banks. So we can see that JP Morgan and the HSBC enter to this like a metaverse world. Of course, right now it's more marketing than real business, but I guess that, okay, maybe now it's a marketing or PR purpose, but when you're entering, I guess that finally they will try to, to offer some, let's say, bank services, maybe digital bank services to the metaverse. But of course, the question is the metaverse needs banks? Yeah, I mean, like if they need the services offered, like in the real world. Yeah.
Okay, but metaverse indeed it's an interesting addition to this world. I was curious because you both mentioned that it's too risky to go into crypto investments, but at the same time, JP Morgan and the US players are going into this space both in metaverse and crypto. What do you think is different from the banking perspective, from the investment perspective, between Europe and US?
To be honest, it's a hard question for me, but I guess it's I guess that it's about the European regulation basically. That I think it's harder in your internet, but also what, in my opinion, could be different. That, for example, like European banks, mostly like Polish or Central Eastern European banks, are more digitalized, more modern than the banks in in the US, in the other countries. So maybe also this is a little bit about that, that when, for example, old banks are trying to be modern, so they are digitalized in the moment where the different world is, and they are trying to more facing the crypto issues that our banks, which are modern right now, so they are not doing the revolution. Yeah, they have to do the revolution, but it's my guess.
So from the investor side, I think it's a bit strange, but I see the shortage of financing in this region. So compared with the US. So the US market, there are a lot of LPs, VCs, and investing into everything, let's say. And but in the European Union and mainly in the CE region, we have to think twice or three times where will we invest into. And that's why I think that cryptocurrency is too risky for this region, and it's more comfortable for the US investors.
Okay. Thank you very much. I think this is the area that we wanted to cover in our small debate. If there are any questions from the audience, online or here? Yay, background sound. Okay. Thank you for staying awake with us until now, and hope you had some relevant content from our side, and looking forward to see you again. Thank you.
Well, I just maybe as a one sentence that will be optimistic at the end. Although it's difficult to fundraise in CEE, in Poland, we are super lucky to have a very modern banking sector. Yes,
that's
as you both mentioned. I mean, really compared to some U.S. banks, and the experience I had with opening a bank in UK as a company in UK. With opening a bank account in US because we have subsidiaries. I mean, really, the experience in Poland is fantastic. So let's finish this panel with a positive statement.
You saved it. Thank you very much.
Thank you.
Thank you.
Thank you.
Okay, hello everybody. I would like to invite you for a very short break because our panelists finished about 20 minutes earlier. They were very quick. However, make sure to come back in 20 minutes at 3 p.m. to the last panel of the day. You can't miss it. So yeah, see you in 20 minutes.
So, 2 days of content, networking, fun, a lot of coffee. You know, like in lots of companies, they put the number of the coffees that they have just to say how much they are productive. So maybe it's a good idea also, maybe we can try to also in the end just to try to say how many cups of coffee we had in the end of it. I think the number should be astronomically high. We always have to, let's just say, keep the best for the last, just try to make it as interesting as possible. We're going to talk about the collaborate to create a better future. And Diana, first of all, let's just say as a part of the organizers, but on the other hand also, let's just say lots of different hats, talking about Gry Venture, Media for Gucci and everything. So she's hopefully going to talk about all the ideas that they have to create a better future for us. Let's just say with all the pandemics and everything that is happening around us, we really need to have some positivity, and hopefully this panel is going to bring all of this to us. But just to make it a bit more interactive and try to make it a bit more entertaining, first we're going to start with a quick video. You're going to watch the video, and then after that, we're going to enjoy the panel discussion. So without further ado, I would like to ask you to watch this video, and then after that, enjoy the panel.
Growing you with you. LG Upgradable Appliances. What if your home could know you, understand you better every day, grows on you, with you, for you, as time goes on, just like your loved ones, for your better life. Your choice of the latest innovations so they fit around your lifestyle. Ever changing, improving so it always feels like new. Even better than new because it learns how you like things. Upgrade your appliances and upgrade your life. Use your LG ThinQ to unlock brand new potential with upgrades for your appliances, so they can do more, better, and get smarter all the time, with a better understanding of you and your life patterns. Ready to change with you as your life changes and as your world expands. Upgradable will change your home life like never before. Step by step, with you and for you. A true companion on your life's journey into the future. Growing you with you. LG Upgradable Appliances.
Good afternoon, everyone. Thank you for joining us. And as Ahmad said, it is indeed probably saving the best presentation for last. We did have a small hiccup earlier, but you can't have it any other way. So LG Electronics is one of the world's leading brands when it comes to home appliances, encompassing everything from TV, ovens, air solutions, and more. But some of the things that maybe some of you might not know is that actually LG also leans on working with startups and having really strong partnerships with companies of all sizes. And the company initiated many pilots in the past, and I'm really excited to actually have one such company with us today, joining us from the US to discuss their current and previous partnerships. And in 2021, LG also opened the LG Venture Client Unit called LG Future Home. So we'll be discussing that as well, what that means and how larger corporations can partner with startups and companies successfully. On that note, first I would like to welcome our virtual speaker, Tae-Hong Park, who's the head of venture from LG Future Home. Hi, Tae-Hong.
Hi, Diana. Hi, everyone.
So Tae-Hong is joining us from South Korea, which is, it must be very late for you right now. What time is it there?
It's a little past 10 p.m. right now.
10 p.m. Thank you so much for your time and for being with us here live. I don't want to keep you any longer, so I just want to say that Tae-Hong is going to give us a very short overview of the LG Electronics as well the LG Future Home and the vision behind it. So with any further ado, Tae-Hong, the virtual stage is yours.
Great. Well, thank you for the introduction. It will be my great honor to take this moment to introduce LG and what we are trying to do. LG is actually a large group with various member companies in multiple industries. We have LG Chem, LG Display, LG Innotech, and LG Electronics is a flagship company under LG Group. So I belong to LG Electronics, home appliance air solution business. And these are the primary home appliance and air conditioning related products that we do. And I'll talk a little bit more about that in our next slide. We also have a home entertainment business group, OLED TVs, so sound systems, personal laptops. And not many people know, but we do vehicle component solutions. These are the infotainments, such as telematics or the dashboard with the infotainment related displays and so on. We also do electric vehicle traction motors, and this is one of the newer initiatives under LG Electronics, and safety and convenience devices. And the fourth and finally, we have a business solution. They are targeting B2B business with commercial displays, information displays, and also some of the energy-related applications as well. LG Electronics overall is about, this is in trillion won, translated, this is about 70 billion US dollars. So home appliance and aero solution is the largest business group in LG Electronics, and the subsequent other business groups are shown on this slide. So what products and services do we offer? We have, in this slide, divided our product in various sort of zones in your homes. So in the kitchen appliance area, we have, here you see, this see-through refrigerator. We also have a wine cellar. We have the cooktops, induction cooktops, ovens, dishwashers. We also make microwaves. And this is one of also newer initiative under our business group. This is actually what we call homebrew. It's semi-automatic beer brewing machine targeted for beer manias and craft lovers. We also have home use and also some commercial use water purifiers. In the living appliance, we have the vacuum cleaners and also robotic vacuum cleaners. We have a massage chair and also a washer dryer. This is the latest model, having them actually one large unit combined. And we have what we call styler. This is where you hang your clothes, and it actually styles and unwrinkles your shirts and pants. And the latest product, what we call Tium. This is indoor, as you can see, a small gardening appliance that you can use to grow various vegetables and some fruits as well. Air solution area, we have air conditioning units for both residential area and home air, residential and commercial. We have air purifiers, purifier with heater built in, and these are the large commercial units that go into the big buildings. We make our own compressors and motors. They are the backbones and engines of these appliances. And that's where some of our core capabilities and competency come in. And now this large circle that you see with label LG ThinQ, that's LG app, like a smartphone app, where you can download and control and monitor various aspects of the appliances. And that's the direction that we are trying to go. Now, our lives evolve with various living style change and patterns and so on. And why shouldn't these appliances also evolve as we do? So what we call the future of home, LG upgradable appliances, this is where we use our ThinQ app and sometimes a plug-in hardware module so that the machines, appliances can become with newer functions and features and so on. So for instance, you can download a very specialized pet care washing and drying course, because you may not have a pet before, but you do have a pet now. And the voice control is where you can control, say, the air conditioning unit as you talk to your refrigerator. So as you get your drink, you can say, oh, it's too hot, turn on the AC, and the AC will turn on. Now, this is a little knob that are on some of our appliances. You can download various emoticons that are tailored for particular season or holiday. And you can also download a special function in your app to do some fine tuning of detergents and also drying levels. So this is the vision that we see where the future of appliances will be. It's no longer a fixed machine once you buy them, but it's going to be a machine, appliances that adapts to your lifestyle and give more convenience as you evolve with your life as well. Well, thank you for the presentation. And thank you for listening to the presentation. And it's been a great honor to give you a short introduction on LG.
Thank you very much, Teung. Maybe a round of applause for Teung.
Thank you. Thank you.
Thank you. And I would like to stay with us for the rest of the discussion, of course. And on that note, I would like to invite on stage my fellow panelists, Michael, John, and Ryan. Maybe just before we start, I want to specifically thank especially John and Ryan and Stefan, who's right here, and Sebastian in the first row. They're coming from South Korea, Stefan and Taehong as well. I know you travel from very far, and John and Ryan from the US, so you guys probably must be a bit jet-lagged. What? Oh, you're just starting your day. You're just starting your day, like 6 a.m., I believe, so you're fresh. Maybe let's do a round of intros. Ryan, let's start with you and we'll finish with Michael.
Hey everyone, I'm Ryan Lipkin, the Director of Business Development at SideChef. We are a content-to-commerce platform connecting food content to shoppability with major retailers, and then bringing that into the smart cooking space and connecting it to LG ovens.
Hi, I'm John Han, Director of North America Open Innovation and Partnership for LG Electronics Home Appliance and Air Solution.
Yeah, hello, my name is Michael Holtkamp. I'm working for the LG Future Home, which is our venture client unit, as a venture partner.
Great, and I don't think I have to introduce myself again, so let's jump straight in the conversation. Michael, let's maybe start with you. We talked about LG Future Home and the venture client unit, but maybe let's kind of contextualize a bit what a venture client unit is and how it plays in the broader corporate venturing landscape, because we have M&As, LG also does investments. We heard earlier a conversation about accelerators as well and other ways of working with startups. What is a venture client unit, and how do you intend to work with companies at LG Future Home?
Yeah, I mean, a venture client unit is actually a new model where we try to buy the solution from external companies like startups. So we don't want to get equity, but collaborate with them and then get in a structured, well-structured way, by proven POC project, the solutions into our company and apply it to our products. And how it's mentioned to within the activity. So for our side, let's say we started last year, 2 years ago, when we had a little bit of restructuring of our team and also initiative. So we considered a little bit how we should work more efficiently in the innovation activities. Then we checked what other corporates are doing, what is state of the art in terms of science or also consultancy. So we came up with the approach of the venture clienting, which perfectly matched. So at that point in time, for instance, we had quite experienced team. So Many of the engineers had more than 5 years of working experience in the innovation space. And also we had been closely related to home appliance and air solution directly at the R&D time and also at the product development. So bringing that together, I mean, we didn't want to reinvent everything we had, so we had a lot of asset and know-how, but we wanted to improve the way of working. And that's what we find this hands-on approach of venture clienting quite useful for us and matching with the targets that we have.
Great. And exactly like you said, you don't want to reinvent something that you already had. And maybe John, feel free to as well, maybe just chip in on this one, because you definitely know this way better than I do. But LG has, more broadly speaking, at LG Electronics, other initiatives. So when we talk about the LG Venture Client Unit, we're discussing about LG Future Home specifically. So it's home appliance and air conditioning and solutions. Another aspect that maybe it's interesting for everyone to hear is that you have such a diverse team in the venture client unit. Is that right? And they have different expertise from different business units. Would you like to maybe add a bit more about that, Michael, where the teams is coming from and what kind of expertise you have in your team?
Yes, I mean, we have a worldwide team, to be honest, so we try to be very close to the partner that we select. So it's worldwide setup. So we have a team here in Europe. That's where I'm also working on, and Sebastian, who is here. We have then the team in headquarter that is working from headquarter. We have a team from US, where John is. We also have the team in Japan, Kyoto, and in India. So we try to be quite close to the companies that we work on and collaborate. So, and of course, some of the members are coming quite closely from the business unit, had been working long year, like John here. So we are working a little bit members that are a background of business education, and also from our side, we had been working quite long in the innovation space before on the corporate level.
And maybe John, especially John and Ryan, they've been partnering very closely together on the partnership we were discussing today. How did everything started? Maybe going all the way back to 2018, even before the partnership started. Okay. What you were looking for?
Actually, this our partnership is totally based on the upgradable appliance initiative. So in 2016, 2018, we actually we are a Series A investor in SciChef, and after that, we were looking into how we can create better user experience for our customers using our oven, and also including our ThinQ app. And then we were discussing probably very long time. And we were thinking about the recipes and also shoppable experiences. It was our roadmap at the time and also current roadmap. And we were thinking about Y+5 and what we're gonna do. And SciChef shared the same ultimate goal. And we had perfect fit to be working together. And that's how we started working, and we launched the app in the US last month, right? Yeah, in March. And we're trying to expand it globally now.
Great. So Ryan, we heard from John why SciChef. Why LG? Why did you choose to work with LG? And it may sound like a funny question. I think it was a conversation yesterday from another fellow corporate partner, and the question was, maybe actually companies at an early stage, they should just go and have a proof of concept or a pilot with any corporation just to have it right on your kind of company resume, so to say. But it requires a lot of work. It requires a lot of efforts, a lot of resources, right? So why LG? Why did you choose to work with LG?
Sure. So besides the promised trip to Warsaw, then
was that from the beginning? Well, it happened, at least.
It did happen.
Okay. That.
No, really, as John was saying, we had our roadmap ahead of us, looking at the kitchen manufacturer space, understanding that Wi-Fi enablement was coming, this upgradable future was what they wanted, and it's what we were building. And so as we looked at LG, we looked at our roadmap, we looked at their roadmap, it looked very similar. And so that vision really led us to really say, okay, this is a company we want to go deeper with. And
maybe
really
just tell people what SciChef actually does.
Sure. So so for LG and for others, we've built a platform that allows recipe content to live within the ThinQ recipe experience, for LG ThinQ users to view beautiful recipe content, to shop that, which offers new revenue services for LG, and then really to enable and make a reason for people to connect to their Wi-Fi enabled oven, learn about new cook modes, and actually use them.
So obviously maybe this was not a traditional route towards the partnering as other startups, because you had the formal investment with LG, so that relationship started early on. But if you were to think of a systematic process of what you would actually consider when partnering with another corporation, what would that be? What are the kind of I would say criteria they would think about to partner with the corporation?
Yeah, so for us, I think, as I mentioned, really shared vision is most important, because we wanted to be in business with someone who saw the world the way we did. And it really makes it so much easier to have discussions about where we should go with our joint roadmap when we see the same way. And then, frankly, from Taehyung's presentation here, this is clearly one of the largest companies in the world with tons of resources and the ability to touch a lot of different places. So it was an important choice for us, and we're very happy with it.
Maybe regarding the resources, and both John and Michael, perhaps they could add to this as well. Can you describe a bit more how the partnership actually worked, how you maybe worked to integrate SciChef with LG ThinQ, which is a core application for LG?
Yeah, so the partnership on that end actually really started post-investment. And so the LG venture arm saw kind of where we were going and liked it enough to want to invest. And then over, almost a year of conversations from headquarters and in Silicon Valley, really kind of making that roadmap a reality. And so, yeah, go ahead, John.
Yeah, even though it was initial investment was by venture arm, but they do have to consult the home appliance division for the investment in a way, because we usually make strategic investments rather than just financials.
So what have been some of the, I would say, the best learnings on the LG side? I know SciChef obviously is an amazing story, and I know you have other partners and other startups that you've been working with previously. What are some of the learnings from these partnerships, good and bad?
Yeah, some of the learnings is that you know how the strategy changes somewhat, right? But SciChef was really like, it's like people to people working conditions, and they're very they have great people, great management and all, and also they were very how do you call it, supportive of the change, and we can always like discuss it and try to make it better. And also they have a great organization. They are like very focused, and their teams are more like corporate teams, kind of. So like if we need something, we can get it. We can get their support and get their help from all different teams from them.
And it is true that the partnership started before the LG Future Home Venture Client Unit was launched. Is there a specific reason the Venture Client Unit started now? And perhaps are you thinking, for example, that this Venture Client Unit maybe might speed up the process, perhaps with future companies that would like to partner with LG?
Well, yeah, I think definitely it will speed up the process, because like initially, like we were, as Michael mentioned, that we have teams in Japan, Germany, US, and also India. So it was like sort of like individual contact and individual work for getting this business started or collaboration started up. But now, since they have a single source or a single platform, LG Future Home, then we can be more efficient and productive in a way.
Michael, would you like to add to that in terms of the broader vision behind the venture client unit? Are there any kind of processes or things that perhaps you experienced previously when working with other partners that you would like to streamline further within the venture client unit?
I mean, there are some important parts. I mean, we have now much more options to do proof of concept projects, which are budgeted, and we have a proven budget for that, so we can more easily act more freely from our side and select the startups that we want to work with. So that was more difficult beforehand, and we really have to find a partner. They have to pay it, which was more difficult. So this is more streamlined in our process. So we have much faster way to act. And also it acts quite well in the overall LG activities. I mean, we've mentioned that there was the investment from our venture capital arm. So if we run some nice projects with our startups, we already know quite well how they behave. We know the team, we know the technology. We also know a little more the strategic fit. So it's quite easy then for the venture capital team to only drive a capital investment if needed. So we complement these activities, not competing against this, for instance.
Great. So basically, thinking about the LG Future Home, where it sits within the broader LG innovation, there's clearly synergies between both the investment arm and other initiatives that you currently have running. Perhaps Teong, if you're still with us, I didn't forget about you.
Yeah,
I would like to hear I would like to hear your thoughts as well, because you actually bring a very interesting perspective to this conversation, and it's important for people to know as well that you have experience in founding your own company, but also you spend significant time with LG. So you know you have the mindset of an entrepreneur, but also understanding how large corporations work. For a lot of startups listening in today and with us today, how can they even approach a partnership with a large corporation like LG? What they should think about? How can they basically set up themselves for success? Important is having the right culture.
That's a very good question, and that question by itself is a big topic. But let me try to address that in a very simple and concise fashion. I know startups come with a lot of interesting ideas with some innovative technologies or services. And oftentimes, the first step is they don't know how to contact the relevant person at large corporations. And that's one of the reasons, along with other things, that we have reorganized and restructured our various internal open innovation activities with the linked global network with our Future Home website, so that those who have any relevancy in the home area can anytime can apply to with their proposals and so on. Now, we often see startups struggling sort of fine-tuning their business model, especially showing some link to how we could potentially collaborate from our home appliance point of view. Certainly, they may not know everything in our industry, but when they have some ideas or opinions on potential collaboration topics or collaboration models, that can also help us better understand startups and how they view their value and how they view working with LG. And certainly, I know startups are very open and flexible to various options, but it also helps us to think what might be the right approach to working with startups. As it was mentioned before, we have a flexibility with investments. We have a flexibility with buying solutions, having some business partnerships, and so on. So I think that's really the sort of a comprehensive tool that we have that really enables us to more effectively work with startups. And that's sort of the reorganization that we have gone through for past couple of years with the launch of the venture client unit last year.
Thank you, Teong. And I guess if I made a summary basically of what you said is how important the LG Future Home, the venture client unit, is in terms of giving the startups almost a gateway into the broader LG ecosystem and environment, right? Because within that venture client unit, you have experts from different business units that can easily assess the company and also provide a much faster conversation and essentially to tell them whether there is a strategic scope or not, which again speeds up the entire process.
Right. I wish startups see us as a sort of moderator or facilitator between startups and LG business units. We know the needs and wants and of our business units, and we can help the relationship, help the dialogue between startups and our business units so that we are right on the target on our topics of interest, and the discussions and communications are more effective so that we don't waste the time of startups. I know their times are very valuable. So we want to be more efficient and effective during the process.
Great. Thank you, Teung. Ryan, would you like to maybe add from your experience and to other founders listening, what would be your advice to other companies that would consider partnering with LG or other large corporations as well?
Yeah, so I certainly am excited to see how this new group really can help prosper for other startups. I think it probably would have sped up our eventual relationship together, and I think for any startup that's trying to wade through a large corporate partnership is that it takes a lot of different people to really, you've got to pitch over and over again sometimes to really get buy-in from multiple different groups. But it's, in the end, when successful, super rewarding, right? And so it can take longer than maybe most startups are looking to. Speed is always, for any startup, is very important. But sometimes you got to go at the pace of your partner.
But thinking specifically about your partnership, after the investment in 2018,
yep.
Already a month ago, you launched in the US. So basically, SciChef and LG ThinkU app, they are compatible, they work together. And you have really ambitious future plans, maybe not so far in the distant future, but hopefully more happening quite soon. Tell us a bit more about that, because it sounds like, although maybe 2-3 years may sound like a very long timeline, you achieved a lot, and together, obviously, in that time.
Yeah, and I think it was really just kind of getting started was the longest part, and then since we pressed go, it's been super fast. And from mid last summer to launching in March, we were both really impressed with. And as we think about our future now, it's about how do we layer on revenue services into the ThinkU app, and how do we get ready for our fall launch in Europe?
Yeah, so as Brian said, it went super fast because SciChef organization is structured that way. So, and it exactly fits our organization. So like development teams, business development, like they can just like talk to each other one-on-one. And so that's how it moved really fast.
Great. This is a really great conversation, and thank you all for staying with us and for coming. And I want to also pass the mic to Michael right now for a special announcement that we've been working tirelessly and preparing this for the last month. And this actually, it's a very interesting, I would say, strategic layer to the venture client unit, LG Future Home. But I will let Michael do the honors and make the announcement.
Yeah, thanks, Diana. I mean, we have seen here the wonderful partnership that we have established between SciChef and LG, and we see how successful that can be if we have good partnerships and integrate it in our ThinkU app. But of course, we don't want to stop here. Yeah, we want to do more, and we want to enhance and increase the success cases that we create with our venture client unit. So therefore, we now want to collaborate with our external partners, startups, SMEs, companies, to create new, enhanced user experience, new products together, and to create the future of our home. That's a little bit our ambition. And to do so, I mean, today we can announce the first LG Future Home Global Innovation Challenge that we will do together with Wolf Summit as our partner. And target for this is also, we have the co-innovation activities that we will group in 4 key areas that we try to get from our partners that can apply for it. So it will be on the one hand side, upgradability, like we have seen in the presentation and also in the video. So upgradability of our product is a key direction. We want to involve in the new lifestyle trends that are affecting our home appliance and air solution products. Also, we want to see what kind of new innovation in components, in technologies are coming, in materials and embedded. And last but not least, the future transformation of our business unit, digitalization of our business models is a key. And we would like to get applications for all of these areas by startups, SMEs that have good solutions in the fields.
Great. Thank you, Michael. And if I just may add to that, obviously we are extremely excited to work with LG on the first LG Future Home Global Innovation Challenge. And I know the team has worked tirelessly for this announcement that is happening today. We at Wolf Summit are particularly excited to provide the event as a platform for a partner like LG to find such companies. And we also want to be part of it, not just to facilitate that connection with strategic partners, but more so to award companies that will be reaching the final stage of the application to pitch in the Great Pitch Contest semifinals in May for our flagship event between the 24th and 27th for a chance to win the big prize. Maybe we can answer a couple of questions, Michael, John as well. So we talked about the four types of solution technologies that LG is looking for. Maybe in terms of the companies or the maturity stage, and are there any geographical restrictions for anyone that would like to apply?
Maybe I start. I mean, first of all, we are looking globally. I mean, that's always our initiative. So we're trying to look globally for the best solution for our problems. So worldwide, we will look for partners for these topics. In terms of maturity, we're looking more for companies that are matured enough so that they have minimal viable product, MVP ready, to prove that their solution is working. That's also because we have a big R&D team in our background, and of course we should speed up the entire process. If we can do it internally faster than get an external solution, and it doesn't make sense. So we would like to have a certain maturity level for startups or companies to apply.
So basically companies that are post MVP stage, or what we call the technology readiness level past 6, and there's no geographical restriction they can apply.
Not at all, no.
Right. And I think we do have one question from the public.
Thank you very much. Just one question. Can you explain why should companies consider applying for this particular challenge?
Michael, or?
Yeah, I mean, first of all, what we offer, I mean, the key is we offer the access to the home appliance and air solution market. Yeah, so we want to collaborate and then bring the technology or solutions from the partners that apply into the market. So we can collaborate. We have a budget for proof of concept projects, so we will sponsor that for the winners of the challenge. And if we run successful projects, we also then have a track which can lead that the solution goes into a product commercialization and a long-term commercial agreement. So that's the way that we offer. So we offer the potential of a commercial agreement and the commercialization of the technology in the home appliance market.
And becoming the next side chef, hopefully.
I forgot that, yes.
Are there any other further questions from the public? If not, maybe if I can ask my team to put up the announcement just one more time. And then on that note, we can wrap up with a couple of the important dates for anyone that is listening today. So the challenge is officially live. Anyone that is interested and eligible to apply can apply on our website, challenges.wolfsummit.com/LG, or following by the QR code. You have time till 9th of May to send your application. There is a two-step process. The first one would be a very short application form, and our team will be in touch with you to provide and attract other information from you. And then lastly, on the 9th of May, we'll close applications, go through all the submissions, and on the 16th of May, we will have the short listing of companies that will be invited to pitch in the finals, the final day for the selection at Wolf Summit.
Yeah, maybe to add, I mean,
Yes.
of course, we have partnered with Wolf Summit, and we're proud to be working with Wolf Summit, because you give us also the opportunity that our selected candidates, the finalists, will be pitching at the Wolf Summit in Wrocław in 24th, from 24th of this May. So that is also why we selected Wolf Summit, and we also have done the selection of the finalists and the winners during this event.
Great. Thank you, Michael. And thank you, everyone, for listening in. I know we are meant to wrap up with a short announcement as well from Michael Chaffee, our CEO, who is still taking his time. He's not with us just here yet. No, he's not. So if I may ask everyone, he is?
No, but I would be more than happy to wrap it up and then pass the mic to...
Of course. If I may ask everyone maybe just to stay with us for 5 more minutes. Michael is just building momentum as always till he comes on stage. But first, I just want to thank Ryan, John, Michael, Sebastian, Stefan as well for coming from so far away to be with us today. And just a round of applause for having them with us today.
Not to forget
And Teong. Where is Teong? He's still with us? Probably.
I'm here. Yes.
You're here. And thank you so much as well for taking the time. I know how late it is for you.
No problem.
Thank you. Thank you, everyone.
Thank you.
Thanks.
Very much. So guys, back in 2015, as if like it was yesterday, that was the first edition of the Wolf Summit. So things were totally different. Let's just say startups were looking after a few thousand zloty. Now they are after a few million. Before there were like 5 people that you have to find in the audience that they were not coming back from the next street or from the next city, but rather, let's just say right now we have people from other continents that not only they are coming here to basically see startups, they're coming here to establish things here. Then we moved a bit further, and then Wolf Summit was supposed to be something around the startups in Poland, and now we're having CEE. We see people from Ukraine, we see people from Romania, we see people from Hungary. They all come here just because, let's just say we're in the center of Europe. It's very easy for them to find each other, find opportunities, synergies, and somehow try to work together. So for me, this is also very interesting because this is the first edition of the Alpha Wolves. So maybe 7 years from now, we would be again back here. I was like, do you remember back there, like when the startups were looking for a seed of 1 million? That was funny, right? Because right now, like startups get 1 billion just for seed money, and I don't know, go for innovation challenge of the 7th edition of the LG, and then you will see that, you know, like you will bring your, I don't know, like fridge with yourself, and then it will introduce you before you will be on stage. So it just shows that how much innovation can help. And at the same time, another thing that I really see is, first of all, the beauty of what we see in the solidarity between people of Poland and Ukraine and all the things that happen. That was, for me, really heartwarming. And especially when you see how much technology can support it. Because frankly speaking, a few weeks ago, with the whole situation that happened with the invasion, we were not even sure if Poland would be safe enough to do that. But when we see this unity, in or outside of the science, we really, you know, somehow try to understand that we are all closer to each other, and how much this science, innovation, and everything, not only in the form of finance, can try to bring us together, but just, you know, as humans and let's just say, you know, as people that we all believe that we're in this small world together, and whatever we do is going to always come back to us way faster than that. I'm not going to take much of your time. I'm just going to pass the mic to Mike. It's always funny, right? Like, yeah. You drop the mic, there's a hot mic, and then there's like pass the mic to Mike. So Mike, the mic is yours.
Thank you, Ahmed. Hi, everybody. Great to be here with you. So here we are, Friday, 4 p.m. at the end of our civilized segment of our first ever Alpha Wolves event. As the designated Chief Entertainment Officer of our distinguished organisation, rest assured that you're in safe hands for whatever should happen between now and 7 a.m. on Monday.
I'm certain that all of you have made some amazing connections over the last 2 days. In total, there have been 716 meetings held both here at the venue and remotely. Although there is one individual with incredibly resilient vocal cords who has managed to rack up a whopping 34 meetings since 9 a.m. yesterday. And it just so happens to be her birthday today. Really. Let's hear a loud round of applause and welcome Paulina Szczepinska from BNP Paribas to join me up here on the stage. I'm serious. I'm deadly serious. I'll show you the stats. Now, I know that it's highly impolite to ask a lady of her age. And being a true gentleman, I would never dream of doing so. However, we are at an innovation-focused event where creativity and thinking outside of the box are championed. So I took the liberty to have a wild stab in the dark and place 2 numbers on the cake. And unfortunately, we can't.
Oh, we can't. Okay. We don't want to shower. Thank you. Thank you, guys.
Happy birthday, Paulina. Thank you. Thank you so much for being with us, Paulina, as well as all the other amazing guests and partners that have been with us for the past 2 days. By the way, Paulina, our Innovation Challenge contract is in the post. Now, I can see that a few of our functional alcoholics in the crowd are getting fidgety. Rest assured, guys, I'll be wrapping up soon and we'll be on the way to the hotel. Recently, a local media publication reached out to our PR manager to ask for a quote. The one question from them that really stood out to me was, "What are you the most proud of?" It was a no-brainer and the words fell out of my mouth instantly. Seeing the company able to maintain the core team that have been and still are with us since March of 2020. It makes me so damn happy to see them all here together in action, knowing better than anyone just how much effort and personal sacrifice they've each made, not only to allow our business to survive in this environment, but to expand into new verticals and regions. Please give an amazing round of applause to the special individuals that have made Alpha Wolves possible. Okay, now one by one, I will invite them onto the stage. Monica Davidovich. Orderly fashion, please. Next person. Alicia Kleber. Alicia? Okay.
Thank you, everyone.
Alicia, have you learnt nothing in the last 2 years? Tomasz Samuel. Anna Corol.
Thank you.
You're all coming back up for a photo. Alexandra Malaj. Hola. Joanna Godalska. Victor Bokowska. Bokowski, sorry. Where is he here? Okay, I'll put it there. Oh, that's myself. Martin Ring, are you here? Okay. Diana Floresu. Please say I haven't forgot anybody. Rosie Chaihutin. Gorgo Gulias. And last but not least, Elena. Okay, guys, now if we can all jump up on stage for a group photo. Okay, so I hope everybody's had a great time. I know I certainly have. Really rewarding event. Lovely to see all of you. So those of you that are coming to the evening networking at the Hotel Warszawa, we're kicking off the festivities at 6 p.m. So looking forward to carrying it forward there. Thanks so much.
you.